For the benefit of our witness and our audience, the Democrat caucus meeting this morning is running a little late. We can see which members attend and which don't. We'll give another couple of minutes, and hopefully the ranking member and others will be able to join us. The committee will come to order without objection. The chair is authorized to declare a recess of the committee at any time. The chair now yields himself 6.5 minutes for an opening statement. This morning we welcome back Director Cordray to deliver testimony on the 5th semi-annual report of the CFPB. Protecting consumers within interstate commerce is a vitally important mission of the federal government. And properly designed, the CFPB is capable of great good on behalf of consumers. It is also capable of great harm. In just 3 years, the CFPB has grown into an unaccountable federal leviathan of nearly 1,400 employees with over a $500 million budget and the unrestrained power to dictate which Americans can receive credit and which Americans cannot. Knowledgeable Americans are rightfully alarmed as the threat and the harm begins to mount. Since Director Cordray last appeared before our committee in January, we have learned much. First, we have learned in the first quarter of this year, we actually had negative economic growth of 1%. And whether you speak to practically any small business person in our country, any community banker, they will tell you that the sheer weight, volume, complexity of the regulatory red tape burden is one of the primary reasons that they cannot expand and hire more people. We hear, for example, from Barry in Chicago. He says he owns a small insurance company. But he said, quote, "I spend most of my days on the CFPB website reading through all the regulations and trying to implement them into our system. My loan officers can't believe all the new complicated forms, and our borrowers are all confused. The CFPB is adding such cost to the business that only Wells Fargo, Chase, and B of A will be left for consumers to obtain loans." Regrettably, this is not a unique piece of correspondence. It is one way that the CFPB is regrettably harming consumers and helping keep people underemployed and unemployed. We have also learned since Director Cordray's last appearance that the CFPB is incurring even more cost on its building renovation. What was then going to cost an estimated $145 million is now costing at least $184 million, according to information provided by the Bureau itself. That is $30 million more than the building is even worth, a building we must remember that the CFPB does not even own. This is what happens, I believe, when an agency is essentially unaccountable to the people. Even more troubling, we have learned since Director Cordray was last before the committee, that the joint database project of the CFPB and the FHFA will undeniably collect personally identifiable information on millions of Americans in the National Mortgage Database. I'm not speaking merely of names, addresses, phone numbers, though the database will certainly include those, but shockingly also people's Social Security numbers, their race, their religion, personal financial information, and even the GPS coordinates to their homes. If this is not considered personally identifiable information by the CFPB, then I don't know what is. A breach of this database could cause untold harm to consumers by the very agency that purports to protect them. Without a doubt, this National Mortgage Database is an unwarranted and shocking intrusion into the privacy of American citizens. It is a database I would fully expect to see in either Russia or China, but I am appalled to see it in the United States of America. And I predict as more Americans become aware of this, they too will be appalled and will demand accountability from this administration. Next, we clearly have the most appalling development that has occurred since Director Cordray's last appearance here. Independently corroborated reports of widespread discrimination and abuse of employees at CFPB. Not merely virtual discrimination, not merely theoretical discrimination or statistical discrimination, but appalling acts of actual discrimination. Since these allegations first came to light, this committee has served as a virtual trauma unit for employees who have come forward to report discrimination, retaliation, and other apparent violations of law at the CFPB. And although our committee has publicly invited aggrieved employees from every other federal agency within our jurisdiction to come forward if they have experienced discrimination or retaliation, so far, the only ones who have come forward all work or have worked for the CFPB. Most wish to remain anonymous because they fear retaliation. But as you prepare to give your testimony, Director Cordray, I have no doubt you are aware that we will publicly hear from other whistleblowers this afternoon, including one, Mr. Kevin Williams, whose testimony has already been delivered to the committee, who will testify later this afternoon about the CFPB, quote, the frequency and duration of these occurrences, and speaking of discrimination, created a hostile work environment for all blacks at the Bureau, whether they were unwitting, manipulated black managers, or mistreated hardworking black employees. It's just that we, the latter, suffered the objectively adverse consequences. Again, this whistleblower testimony is not unique. I have no doubt that all agree, including the Director, that invidious discrimination and retaliation are not only illegal, they are also morally repugnant. And until I heard it with my own ears, I never would have believed that a federal office in the 21st century would commonly be referred to as the plantation. I, for one, am uninterested in hearing how the system is to blame, Director Cordray. I'm uninterested in hearing about plans to conduct listening sessions and hiring consultants when the real problem is the people you have hired to help run this Bureau. These disturbing developments once again demonstrate I believe conclusively why there must be substantial structural reform at the CFPB. Consumers deserve accountability not only from Wall Street, but they deserve it from Washington too. Yet by design, the CFPB remains arguably the least accountable Washington bureaucracy in the history of America, and it shows. This must change. The Chair now recognizes the ranking member for 5 minutes for an opening statement.
Thank you, Mr. Chairman, and welcome back, Director Cordray. Today, we once again gather to review the Consumer Financial Protection Bureau's semi-annual report. And Mr. Director, since you were here last January, Republicans have been hard at work, drafting and passing burdensome legislation that would gut your agency and its ability to stand up for our nation's consumers. In the past 6 months, Republicans have advanced a number of these harmful measures through this committee and this House that would undermine the CFPB's ability to protect consumers from deceptive marketing, unlawful debt collection, lending discrimination, illegal fees, and other prohibited activity. I'm disappointed that a package to destabilize CFPB's leadership and its autonomy and tie its funding to the whims of the congressional appropriations process made its way through the House of Representatives. If enacted into law, we would be one step closer to Republicans' goal of ending the CFPB's ability to protect all consumers, including students, seniors, families, and service members. Just last week, this committee considered and passed a collection of measures designed to bog the CFPB down with additional paperwork, increasing its bureaucratic responsibilities and eliminating important tools at their disposal. It saddens me that my colleagues on the other side of the aisle have aligned themselves with Wall Street predatory lenders and other bad actors in our financial system at the expense of protecting customers and consumers. I know in my district, the Bureau has been helpful with all manner of constituent requests, and I'm confident that the constituents we all serve benefit from the Bureau's expertise, despite opponents' unwillingness to embrace its mission. Nonetheless, Director Cordray, we welcome you on this, the CFPB's 50th appearance before Congress since its inception in 2011. That's nearly one appearance before Congress every 3 weeks. Director Cordray, I'd like to thank you for making yourself and other senior CFPB officials available to come before this body and discuss the important issue of diversity and discrimination. While I remain disappointed that my colleagues on the other side of the aisle have not granted us the opportunity to speak with you on this issue sooner, I hope to hear more from you today about your progress in addressing these issues. Mr. Director, this is the 5th time you have released a semi-annual report as called for by law, and each time your agency has shown remarkable progress in your investigations and advocacy for American consumers. This most recent report shows a continuation of your unprecedented record of success protecting consumers and service members. To date, the Bureau's enforcement actions have refunded $3.8 billion directly to 12.6 million consumers, and the American public's trust in the CFPB to fight for them has only increased as the Bureau has received more than 354,000 consumer complaints, resolved tens of thousands of individual problems, and provides answers to more than 1,000 frequently asked questions posed through its online portal known as Ask CFPB. The semi-annual report also indicates the Bureau has continued its unprecedented success in enforcement actions against a wide range of institutions for unscrupulous actions. In the past year, the CFPB was a party to 31 enforcement actions for violations of law, including mortgage servicing, kickback schemes, fair lending, unfair billing practices, tactics, and deceptive marketing. The CFPB has issued a number of important regulations that protect consumers from predatory financial practices while having significant success on behalf of our nation's active duty military. In fact, CFPB's actions and collaboration has led to over $100 million in refunds to our service members. So I welcome you, Director Cordray. I commend you for CFPB's impressive track record in these very few short years. And I'd like to insert into the record the information that was alluded to by the chairman on mortgage data collection. It seems that National Mortgage Data Database was launched by Mr. DeMarco, and that the mortgage data collection repository is included in the chairman's PATH Act bill. So there's only one sentence devoted to protecting personally identifiable information in that act. So I thought the chairman should be reminded of that, and I yield back the balance of my time.
Gentlelady yields back. The chair now recognizes the gentlelady from West Virginia, the chair of our Financial Institutions Consumer Credit Subcommittee, for 2.5 minutes.
Thank you, Mr. Chairman, and I would like to thank Director Cordray for joining us this morning. In May of this year, the CFPB released their semi-annual report documenting the Bureau's activities from October of last year through March of this year. I'm pleased that Dr. Cordray is able to join us this morning and talk about that report. But I do have some questions about the management of the Bureau and the effect its rules are having on access to credit for consumers. Earlier this spring, we learned that there were some serious discrimination issues within the Bureau. During an Oversight and Investigation Subcommittee hearing in April, a Bureau employee courageously testified about her experiences with discrimination at the Bureau and provided detailed accounts of discrimination and inappropriate conduct by managers at the Bureau. Every member in the hearing was rather surprised as the witness shared her experience and those of the other Bureau employees. I know that Director Cordray has pledged to set the record straight and has promised to make systemic changes, so thank you for that. However, changing the system is not enough, and we need to have some accountability. Failing to do so is a disservice to all Bureau employees. I'm also interested, as you well know, about the Bureau's efforts to monitor the impact of the mortgage rules that went into place in January of this year and the effect they're having on the national mortgage market. We've heard repeated concerns from community bankers about their ability to navigate the complexities of the rule. In some cases, these institutions have decided that rather than attempting to quantify the litigation risks and compliance costs associated with these rules, the institutions are simply exiting the mortgage business. These rules have been on the books for 6 months, and we need to have an honest assessment of their impact on consumers and availability of credit. Consumers are not better off if they're no longer able to work with their local bank or credit union to access that mortgage. It is our job as members of this committee to hold the CFPB accountable. The agency is charged with protecting consumers. However, it is incumbent upon us as policymakers to ensure that these consumers are not being harmed in any way by limiting access to credit as a result of the Bureau's rules. We must also ensure that those who choose to pursue the calling of public service are in an environment that is free of discrimination. I would like to again thank Director Cordray for appearing. I yield back my time, and I thank the Chairman for holding this important hearing.
Chair now recognizes the gentleman from Connecticut, Mr. Himes, for 2 minutes.
Thank you, Mr. Chairman. And Mr. Director, thank you for being with us today. I'm glad to see you. I'm glad that the Consumer Finance Protection Bureau, for the challenges that it has had as it gets started, is here in protecting American consumers. You have been subjected to years now of complaints from the Republican majority around governance, around your structure, around accountability. I will swallow hard and accept that they are making an argument in good faith as they raise the standard of anti-discrimination because they are right. Unfortunately, the information that came out of CFPB is discouraging and concerning, and I trust that you will do everything you can to make that right. I don't want it lost, though, as these criticisms are leveled at you, I don't want it lost what it is that you really do. This is not about Wall Street. This is not about derivatives. This is not about insurance companies. This is about check cashers, pawn shops, shadowy lending operations that cluster around our military bases. This is about products that are designed to strip senior citizens of the equity that they have in their homes. It happens. It happens big time. Is there a need for you to be here? Since you got started, 354,000 complaints to the CFPB about these products, which in some cases are predatory. And you have returned, as the ranking member said, almost $4 billion to 12.5 million American consumers. That's what this is about. It's not Wall Street. It's about protecting individual Americans and returning ill-gotten gains to them. I don't understand why there is this consistent drumbeat of attack on the CFPB when that is your mission, however challenged it may have been to get started. So, Director, I'll trust that on these issues of discrimination you will be quick and firm in dealing with them. I will trust that you will continue to treat the small and community banks that are so important in our districts carefully, but would urge you to continue to do the good work that you have been doing. Yield back the balance of my time.
Chair now recognizes the gentleman from Wisconsin, the Vice Chairman of our Financial Institutions Consumer Credit Subcommittee, Mr. Duffy, for 1 minute.
Thank you, Mr. Chairman. Without reservation, this committee and members of Congress have continually expressed their concern to the CFPB about their data collection efforts. And continually, Mr. Director, you've come to this committee and verbally and to our written questions have told us that that is not what you're doing. You're not collecting personally identifiable information. Well, now we have found out with your efforts with FHFA, you are collecting names, addresses, phone numbers, race, ethnicity, religion, education, wealth, assets. You're collecting it all. My concern is about the truthfulness and veracity of the Bureau and your testimony before this committee. What you've told us, we now find out isn't true. The NSA, they come to us and they tell us they're collecting our phone records because they want to protect us from terrorists. And you collect everything else under the sun, and my question to you is, for what purpose? Who are you protecting us from? I would say, Mr. Chairman, that we need protection for the consumers from the CFPB and their data collection. I yield back.
Chair now recognizes the gentleman from Texas, Mr. Green, the ranking member of the Oversight and Investigation Subcommittee, for 1.5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, I associate myself with the comments of the ranking member and would remind persons that this is but a continuation of the opposition to the CFPB. And more appropriately, I think it's important to say the Consumer Financial Protection Bureau, because as has been stated by my colleague, Mr. Himes, this is an agency dedicated to protecting consumers. And the great work that has been done at the Consumer Financial Protection Bureau has been done not because of, but in spite of opposition. In spite of a refusal to allow the director to testify, the Bureau has succeeded. In spite of a refusal to confirm the director initially, the Bureau has succeeded. In spite of attempts to subject the CFPB to the appropriations process, it still succeeds. In spite of an attempt to create a commission so as to weaken the strength of the entity, it still succeeds. The Consumer Financial Protection Bureau has done an outstanding job, and as evidenced by a document that I would like to submit styled CFPB, which will be Consumer Protection Financial Bureau, by the numbers, we will find that these numbers are overwhelmingly positive as they relate to the Consumer Financial Protection Bureau. And I would like, Mr. Chairman, at this time to ask that this be submitted for the record.
Without objection.
Thank you. I would close with this, Mr. Chairman. The Consumer Financial Protection Bureau is here. If we did not have it, we'd be trying to create it. And I'm grateful that you're here to testify about the good things that the Consumer Financial Protection Bureau has done.
Time of the gentleman has expired. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 1.5 minutes.
Thank you very much, Mr. Chairman. Director Cordray, again, welcome to the committee. And I want to start off by commending you and the CFPB for your outstanding work, particularly in 2 areas. I think your most demanding area has been in the debt collection area, if I'm not mistaken. And we have a very, very serious growing crisis, which I hope we'll be able to get into as we get to our questions, to find out more what the CFPB, and that is student loans. I mean, in my state of Georgia, according to the Atlanta Business Chronicle, our students there, over 1.2 million students, their student loan amount is nearly $40 billion, $39 billion to be exact. The President last week issued a plan to address that. I'd like to know what you think about that plan. I think it would be very interesting for the committee to know and for the nation to know, is this enough? Do we need to do more, and what that might be? The other area is with our veterans. It is a pathetic shame the way our veterans are being treated, and certainly the work that you're doing in there, we certainly want to hear from that. Thank you, Mr. Chairman.
Time of the gentleman has expired. Again, today we welcome back to the committee Director Richard Cordray, the Consumer Financial Protection Bureau. I believe, since he has appeared here before, he needs no further introduction. Without objection, the Director's written statement will be made a part of the record after his oral remarks. Director Cordray, you are now recognized for a summary of your testimony. Thank you.
Thank you, Mr. Chairman. Ranking Member Waters, members of the committee, thank you all for inviting me to testify today about the semi-annual report of the Consumer Financial Protection Bureau. As the Ranking Member mentioned, my testimony today marks the 50th time that a senior Bureau official, usually me, has testified before Congress. You'd think I would have it down by now, but there's always challenges. The Consumer Financial Protection Bureau is the nation's first federal agency, as you know, with the sole focus of protecting consumers in the financial marketplace. Financial products like mortgages, credit cards, and student loans involve some of the most important financial transactions of people's lives. Since we opened our doors, we've been focused on making consumer financial markets work better for the American people, the honest businesses that serve them, and the economy as a whole. My testimony today focuses on the Bureau's 5th semi-annual report to Congress, which describes our efforts to achieve this important mission. Through fair rules, consistent oversight, appropriate enforcement of the law, and broad-based consumer engagement, the Bureau is helping to restore American families' trust in consumer financial markets, to protect American consumers from improper conduct, and to ensure access to fair, competitive, and transparent markets. Through our enforcement actions to date, counting yesterday's enforcement action, we've aided in efforts to refund more than $4.3 billion to consumers who fell victim to various violations of consumer financial protection laws. In the fall of 2013, for the first time, we took action in conjunction with multiple state attorneys general, 49 out of 50, against an online, actually that's a different matter, a dozen or so attorneys general, against an online loan servicer for illegally collecting money that consumers did not owe. We took action against a payday lender for overcharging service members in violation of the Military Lending Act and robo-signing court documents. We took action against an auto lender for discriminatory loan pricing. And we partnered with 49 states in bringing an action against the nation's largest non-bank mortgage loan servicer for misconduct at every stage in the mortgage servicing process. Yesterday, we announced a resolution with the Justice Department and 49 of 50 states against another large mortgage loan servicer that will put $500 million in relief back to consumers across this country in all of your districts. In January, mortgage rules that the Bureau issued to implement provisions of the Dodd-Frank Act took effect, establishing new protections for home buyers and homeowners, mentioned by a number of you in opening statements. During the reporting period, we also issued another major mortgage rule mandated by Congress, a final rule to consolidate and improve federal mortgage disclosures under the Truth in Lending Act and the Real Estate Settlement Procedures Act, which we have called Know Before You Owe. We also issued an advance notice of proposed rulemaking on debt collection, asking the public in-depth questions about a range of issues relating to the debt collection market, which is the Bureau's most frequent source of consumer complaints. To promote informed financial decision-making, we've continued providing consumers online resources, including the Ask CFPB section of our website, where we have answers for more than 1,000 frequently asked questions. A premise at the heart of our mission is that consumers should be treated fairly in the financial marketplace, and they deserve a place that will facilitate resolution of their complaints when that does not happen. As of June 1st, 2014, the most up-to-date numbers are we've now received nearly 375,000 consumer complaints on credit reporting, debt collection, money transfers, bank accounts and services, credit cards, mortgages, vehicle loans, payday loans, and student loans. The progress we've made has been possible thanks to the engagement of hundreds of thousands of Americans who have used our consumer education tools, submitted complaints, participated in rulemakings, and told us their stories through our website and at numerous public meetings from coast to coast. We've also benefited from an ongoing dialogue and constructive engagement with the institutions we supervise, as well as with community banks and credit unions with whom we regularly meet. Our progress is also thanks to the extraordinary work of the Bureau's own employees, essential, dedicated public servants of the highest caliber who are committed to promoting a fair consumer financial marketplace. The Bureau's employees are our greatest asset. Their well-being is the reason I was personally troubled and take very seriously the concerns that you have raised about the Bureau's work environment. That is why we took broad and decisive action to remedy issues related to our performance rating system. After our analysis showed ratings disparities across a wide range of employee characteristics, we negotiated with our union to discard the system, announced that we would adjust past compensation, and agreed to a joint working group with our union to design a new system. By self-correcting and self-remediating disparities in our own performance ratings, we're holding ourselves to the same standard we expect from the industries we oversee. I've also elevated our Office of Minority and Women Inclusion to work directly out of my office and tasked its leader, Stuart Ishimaru, with conducting Bureau-wide listening sessions to hear directly from our employees about their experience with equality and fairness. We've also instituted further mandatory EEO training for all managers. We will continue to work on creating an organization that consciously embraces diversity. Mr. Chairman, Ranking Member Waters, on all these issues, I appreciate your active oversight, and I believe it improves our agency. I also want to be careful about protecting rights to privacy and due process of our employees, and so today I will try to respect their rights by avoiding any detailed discussion of pending personnel actions or individual EEO cases that are fundamentally private matters in this public hearing. We're glad to provide the committee with closed-door briefings as desired and as we have done. We take all such allegations seriously and will continue to seek to resolve any of these issues through the appropriate channels. Every day, my colleagues at the Bureau do great work to accomplish the goals of renewing people's trust in the marketplace and ensuring that markets for consumer financial products and services are fair, transparent, and competitive. These goals not only protect consumers, they also support honest businesses that compete fairly, and they improve the stability of our economy as a whole. Thank you. I look forward to your questions.
Thank you, Director Corey. The Chair now yields himself 5 minutes for questions. Mr. Rector, it's no secret you and I have had both public and private discussions about the accountability of your agency. I look again at the cost, the spiraling cost of the office renovations. I look to the national debt clock to my left and my right. I think a lot about this issue, and I think a lot about how it impacts my children, particularly when I gaze upon them. So the last time you were here, you stated that the cost of this building, I believe, was less than the figure I had, but now the most recent GSA cost is $139 million and change, $22 million cost to temporarily sublease space from the GSA while the renovations take place, $13 million other costs associated with the temporary 3-year occupancy of your temporary space at 1 Constitution Square. This is from your documents. $339,000 to move to the temporary space. Roughly $9,278,000 to pay Skidmore, Owings, and Merrill for the renovation. By my math, this now adds up to $184 million on a building that you do not own. Do you agree or disagree with the math?
A couple of things. First of all, the government does own that building, and if it's
well, I understand that. My time is limited, Director Cordray. If you don't believe the math, if you disagree, just please tell me you disagree.
So what I would simply say is there are numbers about the cost of construction to renovate the building, which has been our previous focus. There are also attendant costs now that we will have to and have, in fact, move out of the building so that the construction can be speeded and therefore more cost-effective.
I understand that, Director Corey. Then let me ask you about a couple of specific costs. Again, these come from public documents that have been filed. So with taxpayer money, you do agree it's taxpayer money, do you not, that you were spending?
I would say that I have children too, and I care about the debt just as you do for the same reasons.
I just asked, do you agree it's taxpayer money, Mr. Director, that you were spending?
It is federal government money. We come from the Federal Reserve, as you know.
Okay. So it's difficult for you to say it's taxpayer money.
I don't know whether taxpayer is the right term or not, but it's money of
I assure you those who pay the taxes feel it's the right term. And so now what I see, and I admittedly have not visited your building. I have visited some federal buildings, but I'm unfamiliar how many have a quote-unquote shady tree bosk, an elevated timber paved porch covered by dark bronze-colored trellis, an illuminated limestone seat walls, a raised water table flowing over waterfall of naturally split granite, and a 4-story interior glass staircase. Now, last time you were here, Mr. Director, you yourself had a lot of angst about this process. And you said, I believe, and I don't have your quote right in front of me, that you were not finishing out an opulent space. I don't know how many other federal buildings have these features. Clearly this is something within your power to say no to at least symbolically tell the American taxpayer you understand it's their money.
I think every halfway functioning shopping mall in America has the kind of features you described. That's puffing by people trying to work through
It's not the taxpayer money, Mr. Director, though. That's my point. I don't know. Do other federal buildings? I haven't seen the waterfalls.
Come see the building. It's a dump. You want to come see it? Congressman Henry has been there with his staff. I would invite you.
Well, apparently it's not going to be a dump after you finish with your granite waterfalls and your tree boss. That's really the point, isn't it, Mr. Director? Let me move on to then a different point. And I know you were clearly aware of the testimony that Angela Martin presented before this committee. One of the things she testified to as part of her testimony was that on the evening of August 7th, 2013, you called her and told her to have her attorneys to, quote unquote, back down. First question, did you call her on the evening of August 7th, 2013?
I've had a number of conversations with Ms. Martin over the course of her time at the Bureau. We're friends, colleagues. I helped hire her. We've talked about, at times, her different situations, and I've always wanted
Mr. Director, I'll give you a chance to give some context, but can you first answer the question? You've certainly had an opportunity now to review the matter. Did you call her on the evening of August 7th, 2013?
I've had a number of conversations with her. I don't dispute any particular conversations. My goal was to productively resolve her matter.
So you don't dispute calling her on August 7th, 2013?
I don't know offhand whether I did or not, but I certainly believe that I did if she says so.
Do you agree or disagree at that time that you told her to have her attorneys back down?
I simply wanted to have Ms. Martin reach a productive resolution of her complaint, which we did do so within a matter of a couple of weeks. That later was reopened. We've now resolved it again. I want her to have a good position at the Bureau where she can do good work for consumers. That's what she testified she wants. I was heartened to hear that.
She used the phrase back down, Mr. Director. Did you tell her to have her attorneys back down?
I don't recall the conversation, but I wanted her to have a productive resolution. I believe that's what she wanted, and I think it is what she has wanted. And I'm glad to see that we're now achieving that. I think she will make a big difference for consumers.
The time of the chair has since expired. The chair now recognizes the ranking member for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Cordray, we ask the chairman and the members on the opposite side of the aisle many times to allow you to come before this committee to discuss the allegations of discrimination, etc. They did not do that. They chose rather to go the subpoena process to somehow try and emerge in this problem with the description or definition of people who really are going to fight for employees that are discriminated against, etc. We don't want to see this used as a political football. Take the rest of the time that I have and tell us how you have managed this problem.
So this has been active oversight by this committee and the subcommittee. I always appreciate the oversight. Sometimes it can be painful to point out shortcomings of ours, and that has occurred here. It is also an opportunity for us to face those frankly and squarely and attempt to do better, and that's what we have done and are doing. This oversight has led us in particular to recognize that a performance management system that we put in place that was undoubtedly overly ambitious for an agency that was just starting up and was partially staffed did not work well for us, did not work well for employees. I heard complaints about it all along on a variety of scales. We have determined that it categorized employees differently on a disparate impact basis among different categories of employees. That was not appropriate in my view. We have now discarded that system working with the union in negotiations. We will have a new system for the coming 2 years, and we will work with the unions for a long-term solution to this. In addition, it felt to me that employees who were harmed by the previous system were entitled to be squared up for what should have been the treatment of them, and that resulted in remediation. You know, those were big steps to take. Other agencies have had similar issues and have resolved them similarly, but often after long legal processes and drawn-out legal processes. We remediated this quickly because we thought it was the right thing to do, and it was important for us to do that. Broader than that are issues of culture at the Bureau, and these are things that are very top of mind for me and personally engaged in going forward. Stuart Ishimaro, whom you know, former EEOC commissioner, a very strong figure, is our head of Office of Minority and Women Inclusion. He has been elevated directly to work with me on these issues, and he is engaged across the Bureau in understanding how people may be affected by culture, job opportunities, promotions, and the like. That is an ongoing investigation. We also are retaining a third-party consultant who will help us focus on these issues going forward. Frankly, as I look back, we were a startup agency. We still are in many respects. We were ambitious in what we were trying to accomplish. We tried to do too much, put a lot of pressure on our employees, and that created various issues and problems. I take responsibility for that. It's important for us to understand and fix those things going forward. I'm dedicated to doing so, and I know you will have me back repeatedly to ask about our progress. And I will be happy to provide updates on that progress, and I expect you will find that we will make significant progress. And that will be good for the Bureau and good for its employees, which is ultimately my goal. I want everybody at the Bureau to have a working environment in which they can do their best work on behalf of American consumers. In spite of all the obstacles, they have done extraordinary work in the first 3 years of the Bureau, and I'm confident they will continue to do extraordinary work. The people I'm proud of are the people who work every day at the Bureau and who work hard to stand up for American consumers. And it is a necessary role, and it's an important role. And I appreciated the Chairman in his opening recognizing that consumer protection is very important for Americans who, after all, are constituents in each of your districts and who need someone standing on their side to see that they're treated fairly in the financial marketplace. That's what we will continue to do, and the oversight of this committee, painful as it's been at times, has been very helpful to us, and I believe will be a benefit to our employees.
Thank you very much. And as I understand it, you have included the employees themselves in getting involved in helping to carry out the kind of rules and oversight within the agency. Would you tell us a little bit more about that?
Yeah, very much so. And this may have been something we neglected looking backwards. We did not have a union until last year. The union has actually forged a very productive working relationship with us. They were adamant that the performance management system needed a fundamental overhaul. I had come to agree with that myself. That's where we arrived in the bargaining negotiations. And they have had a strong voice in resolving some issues that were causing pain to our employees, such as issues around office space, issues around travel, various complaints we've heard. I do want to stress, and I think it's important, our annual employee survey, actually, contrary to some of this scrutiny, indicates a group of employees who have high morale, higher than the average government agency, strong dedication to the mission of the agency, and they are the ones who do the extraordinary work every day. I do a limited amount of work. I do as much as I can, but I'm just one person. They do all this work, putting $4 billion back in the pockets of consumers, making sure that the mortgage market is safe but not overdone, and that access to credit is respected, as a number of you have indicated is important to you. That's the important work of the agency, and it's done not by me, but by close to 1,400 people who I'm very proud of.
Chair now recognizes the gentlelady from West Virginia, Ms. Capito, the Chair of the Financial Institutions Subcommittee, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Director. I'd like to go to the issue of the collection of the data, the PII data. In the Federal Register on April 16th, I believe, of this year, it was noted certain data that was going to be collected in conjunction with the CFPB and the FHFA. And last week we had a hearing, and Congressman Westmoreland from Georgia read through the extensive list, and it was quite extensive. I'd like to ask you about just a couple of those, although I'm sure my colleagues will have other questions. First of all, religion is mentioned as one of the pieces of data that is going to be collected on individuals. Could you, what kind of relevance does that have to why we're collecting this data?
Yeah, I'd like to say two things. One is a general point and one is specific to that point. The general point is what people are reading from, and it's been somewhat misunderstood and misinterpreted, is it's a bureaucratic item known as a SORN. It's a Statement of Records Notice. It calls out what may or may not occur about collections of information and the effect on privacy. So it was overstated in terms of what the National Mortgage Database actually will be. I'm going to assure you today and commit to you, as I did to the Senate Banking Committee last week, we don't have any purpose in collecting religion. That will not be in the National Mortgage Database. I can assure you of that.
Okay, so that information will not be collected.
What's happening is...
Well, that's a yes or no right there.
It will not be in the National Mortgage Database.
So
what we have to... Let me try to explain this, because there's a gap there that I want to make sure you understand. In order to get information, we have to buy it from commercially available sources. Whatever we buy is an off-the-shelf thing that has things in it. Then we're working with a credit reporting agency, not employees of the Bureau or FHFA, to de-identify that information and take out things like name, address, Social Security number. Religion will be among the things taken out. None of our employees who work with the database will have any of that information available. We don't need it, and it would not be appropriate, and that's my commitment to you.
Okay, so that's kind of an in-between answer there. What about education and employment records? It says records. Does that mean hiring, firing, transcripts of educational
I don't believe any of that
achievement?
will be in the National Mortgage Database, but I'm happy to have staff come back to you on those specific points. Again, the information will be de-identified before it's poured into the National Mortgage Database, and our employees will only have access to the de-identified information.
Okay, life events in the last few years and financial events in the last few years. I mean, how does that get collected if people don't self-identify what a life event would be? I mean, is that
again? I
something
don't
you can
believe
purchase?
that that's necessarily any of that. Anything about you or me personally is going to be part of this mortgage database, but I'm happy to have staff follow up with you to give you very specific answers on.
Who makes the determination of what is de-identified?
So it's a frankly a fairly standard thing that's done throughout the government. Particular identifiers that would tell us that it's my information or your information, such as name, address, Social Security number, phone number, bank account numbers, those are stripped off. That's typically what we do with all of our databases, because we're not interested in knowing what Representative Capito is doing for dinner last night or any of that spending information. Private companies care a lot about that, and that's what they home in on. We're interested in knowing what's the pattern of how consumers are affected in the marketplace. And de-identified information is perfectly sufficient for those purposes. We don't need and we don't want more. The other stuff potentially gives us problems and doesn't advance our mission.
Okay, well, and then one question. How many people would have access to this database within the CFPB and the FHFA? I would assume
so it would be a limited
this.
number of people. My understanding is the National Mortgage Database will not be used for enforcement or supervision purposes. It is a research tool. It's designed to close a gap that Chairman Bernanke described several times, both publicly and to me, and Chair Yellen has reinforced. We didn't know enough about the mortgage market before the crisis. If we had, we might have headed off some aspects of the crisis. That blind spot was enormous cost to the American people. I know your constituents and my colleagues and friends and neighbors. People lost jobs, people lost homes. If we'd known more about what was happening in the mortgage market, we might have headed that off. This information is very crucial for those purposes.
Okay, finally, I'm just going to make a quick comment because I just have 20 seconds left. I think that you can certainly appreciate the data security issues that we're dealing with here. The most publicized one being the Target breach, but
yes,
others where millions and millions of records have been compromised. And that is something that I think is, if you're going to cast a wide net, which you obviously are, to collect everything and then only take a few things, it's still, I still think it doesn't give us a measure of comfort, not just about the security issue, but the usage of the information once we get it. But thank you.
I'm happy to try to continue to work with you. I know you and some of your colleagues and those in the Senate are very concerned about this. GAO is looking at our data collection efforts. They will give us a thorough account of that, I'm sure. And we're glad to learn from it. We don't want to have these problems either. It's not going to be helpful to my agency.
Time of the gentlelady has expired. The chair now recognizes the gentlelady from New York, Ms. Maloney, the ranking member of the Capital Markets Subcommittee, for 5 minutes.
Thank you very much, Mr. Chairman and Ranking Member, and welcome, Director Cordray. This is your fifth semi-annual report to Congress, and I believe your agency has a remarkable success rate in helping consumers and veterans, our service people, not only on large policy decisions, but on individual problems, processing truly tens of thousands of consumer complaints. So I want to recognize that good work. And I want to focus on the work that you're doing now on prepaid cards. I read in the paper that you are conducting a review and will be issuing a report on prepaid cards. And I went to the internet when you put up 2 suggested forms on how to disclose information. I'm a big fan of number 1, model number 1. I think it's far clearer. But I understand it was out for comment. Comment closed in April. Could you give us some feedback on what you learned from this field testing of better disclosure on prepaid cards so that consumers understand what they're buying and the services they're getting?
Well, I just feel like we got meaningful additional feedback just there. I'll put you down as a fan of model number 1. We'll add that to our data. What we're doing there is prepaid cards are a growing, fast-growing, explosively growing market for a lot of Americans, and particularly a lot of low and moderate income Americans who often will have benefits loaded by state and local governments in the federal government onto these cards. And then they can be used, if they're general purpose reloadable cards, as a kind of a bank account for people who don't necessarily have access to the banking system. What people don't understand right now is those cards are not protected by any of the consumer financial protection laws currently. They're a new product. They just are, that's a hole in the fabric. We will be not just doing a report, but we're going to be putting out regulations that will provide new protections for those cards. One of the things we're trying to figure out, as you noted, is how do you, when you have a very small package of a prepaid card, you see them at like CVS and places where you buy them off the rack, how do you package the kind of disclosures consumers need? It's a very tricky and difficult thing because there's limited real estate available for that, and the rest of the disclosures may be inside the packet that you don't see.
I understand that. That's not helpful to have the disclosure inside the fees inside. I hope will you address that in your rules and make sure consumers can see that?
It's not as helpful, absolutely, and so that's why we're trying to create clear, straightforward, comparable apples-to-apples disclosures so that people can look at different prepaid cards and get a good sense of the fees, the key fees, and that's work we're doing right now.
Another area is that 2 prepaid companies allow for overdraft, and I, for one, feel a prepaid card is money management for individuals. Let it be a prepaid card, not get into credit and credit cards. So I'm a fan of not allowing overdrafts on prepaid cards. And can you comment on that? Are you doing a study on that in any way?
I'll note your comments on that. That is one of the issues that's come up quite a bit with respect to this rule. We're working that through, and I expect we will have a rule toward the end of summer, and that'll be out as a proposal for public comment. Lots of people will have say on that, but that is certainly one of the main issues that's being considered on these cards.
Well, one of the areas that we worked together on was credit card reform, and this body passed a Strong Credit Card Reform Act, which the Pew Foundation said saved consumers $10 billion a year. Some economists said that it saved $20 billion. They readdressed their numbers down to $16 billion a year. Still, that's a lot of money by ending deceptive practices. And my question is, in your review of credit cards, how is it working? Are you still getting credit card complaints, or is this an area that is working well for consumers and for the overall economy?
We actually now, under the reform law, are required to report to Congress each year on the effects of the CARD Act and what's going on in the credit card market. I would definitely give a huge thumbs up to the work this Congress did on the CARD Act. It has protected consumers, saved them money, made things much more transparent so that they can see on the front end what they otherwise got stuck with on the back end. Many of the things that Congress sought to accomplish have in fact been accomplished. Not always the case with legislation, but in this case it's been good. And you can see it in the satisfaction surveys J.D. Power does of consumers. The respect and trust in the credit card market has steadily grown since the CARD Act was passed, and I do think that's a significant reason why that's happened.
Thank you very much.
Chair now recognizes the gentleman from Alabama, the Chairman Emeritus of the committee, Mr. Baucus, for 5 minutes.
Director Cordray, when you give us assurances that you're not going to use this information like personally identifiable information, all we really have to go on is in the Federal Registry, your agency has asked permission to collect all this information. I mean, is that not true?
Again, in order to have the information, unless we're going to go out and put a lot of burden on institutions by having them dig around and recreate new information, what we're essentially doing is we're buying off-the-shelf products, and then we're arranging to have a credit reporting agency de-identify that information before our employees can ever touch it, see it, work with it. And that's what's happening with the National Mortgage Database, and it's typically our process.
But what I'm saying, you're getting permission, you're asking for permission to collect all this information. I'm not saying what you intend to do with it. You're collecting all this information. And you know, the American people, I think you'll agree with me, they're very concerned about their personally identifiable.
And I'm part of the American people. I'm very concerned about it too.
Now, let's say you at what point will all this come out? I mean, you're saying their religious affiliation, their language is spoken. At what point will it come out? After it gets to the agency or before it's ever
before any of our employees have any opportunity to access or work with that database?
Why, if it's going to be taken out, why not take it out and then send it to the to your agency? Let the people that have it take it out.
So
wouldn't that be safer?
That's possible. Again, the way we set it up, we can potentially change some of this, but the way we set it up was a third party that deals with this kind of information all the time, a credit reporting agency, is the one taking it out.
What I'm saying, you're saying, give us this information, we'll take it out. Wouldn't it be a better approach to say, take all that out and then send it to us?
Look, it's simply a matter of cost. By the time it comes to us,
well, I mean,
for our employees, before our employees can ever work with it or see it, it will be de-identified. That's the crucial thing. But I'm happy to think further about the point you're raising.
Removing all that information you promised us that you don't want, you don't need, you're not going to share. Why not? Why even receive that information?
Simply
now, let me say, if you ask permission, you may not take it out, but this regulation is going to be here until it's repealed. There may be another director. And also, what troubles me, you've also asked this permission. You said where there's an indication of a violation or potential violation of law, whether civil, criminal, or regulatory in nature, and whether arising by general statute or particular program statute, or by regulation, rule, or order issued pursuant thereto. That almost seems like any reason. The relevant records in the system of records may be referred as a routine use to the appropriate agency, whether federal, state, local, tribal, foreign, or a financial regulatory organization, including FinCEN and other law enforcement government entities, as determined by your agency to be, by FHFA to be appropriate. So you can share this information with any other government agency, and you may not intend to scrub this information, but someone else, once it's received, may not. And you say only a few people will have the ability to go in and see that. If we're talking about scrubbing 227 million mortgages alone, not to speak of the credit transactions, the credit card, we're talking about thousands of people that will have to be doing that.
Again, that will be done before the information comes to our agency, so any potential sharing will be the de-identified information.
Well, if it's done before you get it, why ask permission to receive it? Do you see my?
I do. I think that's a fair point, and I'd like to come back to you on that. And there may be some different ways we can.
And let me say, I got 41
PAO is also looking at this,
and I'd like to pursue that with you. Yeah. Participants in the auto financing industry, automobile dealers, they keep asking for clarification on the use of disparate impact methodology being applied to vehicle finance. They still don't have that, do they? I mean, you're enforcing a rule, and they really don't know what your methodology is.
There's actually been a lot of discussion with industry around this, and we have presented our methodology. There was a webinar with the Federal Reserve where we and the Federal Reserve largely agree on the methodology presented to industry.
Would you share that with us?
I believe we have. I know
Okay.
the chairman has been very vigorous in oversight on this issue, and we provided a lot of information.
If you can just share the, your information to clarify the use of that.
I can say one more thing today,
Sure, absolutely.
and I know of interest to both of you and many others. We are working on a white paper on the proxy methodology in particular that we expect to have out later this summer. We're continuing to try to respond on this issue to make sure people
Thank you.
understand.
And
The
thank you
industry,
for
the
the
industry
many-
works on this all the time on their own.
Thank you.
They know
Thank you.
this very well. They're trying to fend off private lawsuits.
And
as well.
thank you for the billions of dollars worth of refunds that you have gotten for the American people. I do appreciate that.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman. Mr. Cordray, thank you for your service and welcome to the committee. Deceptive debt collection practices are becoming a major issue for consumers and service members alike. Nearly one-third of consumer and 45% of service member complaints were associated with the debt collection industry. What is your agency doing to address this issue, and if there is any outreach that you're doing today to inform consumers of their rights?
It's a great issue. It's an important issue. It's one on which we're actually receiving more consumer complaints than any other issue, interestingly. We're trying to address it with all of our tools. So just briefly, what we're doing. We have had a number of enforcement actions against debt collectors that we believe and have found have been violating the law. We have the ability to supervise and examine debt collectors now for the first time at the federal level, and we're engaged in that process, which helps clean up a lot of violations and puts people on their toes. We have developed some consumer tools, such as sample letters that consumers can use if they believe they're being called and harassed at the workplace, which is not appropriate, after the appropriate hours, other things, and exercise their rights. And perhaps most important of all, we are embarked on a rulemaking process. We're in the early stages of it now, where we're going to be overhauling the rules that apply to the debt collection industry broadly, responding to a number of the types of concerns that you're raising, and we've heard from people all over the country, both consumer groups and industry, and also just regular folks that we talk to in our public hearings.
Thank you. And the Dodd-Frank Act directed HUD to publish new informational materials on the importance of pre-sale home inspections. I understand that HUD is in the final stages of completing that process. With all the work CFPB has done to better inform consumers during the home buying process, has there been any discussion about making similar home inspections literature available to new home buyers?
First of all, I'm pleased. HUD has been a great partner, and that's a great initiative that they're doing. I've mentioned this before in committee, worked on that issue at the state level years ago when I was in the Ohio legislature, and it's very important. We are working together with HUD on lots of outreach information to consumers. They have some great substance and tools, and we're developing some, I think, great substance and tools. In particular, I want to say around housing counselors in particular, we've worked together to get information out to the public that I think will be very helpful to people, particularly in saving homes and also thinking hard about how to go about buying new homes. So it's a good partnership. I've enjoyed working with Secretary Donovan. I believe he's now potentially on his way over to OMB, and he'll be a great partner there, and looking forward to the next HUD secretary, who I believe had a hearing yesterday, and we'll work with them as well.
Thank you. Section 1071 of the Dodd-Frank Act requires banks and lenders to collect and report credit application data on small businesses, as well as minority and women-owned businesses. Can you address recent criticism that collecting this information will be too onerous for banks and could lead to less small business credit?
So our strategy on this is twofold. First, we have a number of things Congress has required us to do, and one is to overhaul the HMDA, the Home Mortgage Disclosure Act, database information. We have worked with the Federal Reserve. That will be moving over to us in the next several years, and we believe we may be able to build on that to then complete the requirements of 1071, the small business information, which will be potentially of great use to small businesses across the country. I've been a little remiss. There's a new SBA administrator in.
Yes.
I'm looking forward to reaching out and working with her to see if we may be able to work together in scoping this out. But that is the sort of approach we're taking. I think it makes sense. And in the HMDA rules, we're looking for ways to streamline some of the data collection so it's easier for industry, and I think they're enthusiastic about what we're proposing in various respects, and we would like to be able to do the same here. We want to minimize burden if we can, but still accomplish the purposes of the statute.
Do you have any sense as to when do we expect that you will publish rules implementing this section?
The HMDA rules will need to come first. That's the sort of cart and horse order, I think, that works here, and then this will follow in turn.
Thank you, Mr. Chairman.
Gentlelady yields back. The chair now recognizes the gentleman from New Jersey, Mr. Garrett, the chairman of the Capital Markets Subcommittee.
So thank you, Mr. Chairman. Thank you, Mr. Chairman, and thank you, Director. So American public asks us in Congress in Washington to be prudent in our use of their tax dollars, and I believe all the banking regulators and other regulators in D.C. ask the institutions that they regulate to be prudent in their management of their operations as well. So let me just spend a minute or two on where the chairman initially began his questioning with regard to the less than prudent handling of your operations and the spending of money on your headquarters. You can correct me if I'm wrong, but I don't think I am on any of these numbers. The original estimate for the cost of the reconstruction of your building was $55 million. Then it went up to $95 million. In staff, in May this year, your legislative staff confirmed that the cost of demolition and reconstruction of your building would be $139 million. Your staff was correct on that, I assume, Mr. Cordray, Director?
What you just described is a garble that we have seen repeated in many places, that this supposedly started off as a $55 million project and now has ballooned into something other. That is not correct, and I tried to correct the record in Senate Banking Committee last week, and I'll do it again here.
Well, how about
that
this?
That was never our estimate for the project. That was a placeholder budget number in the first year of what we were devoting toward the larger project.
So how about the numbers where we are right now then? Your ledge staff gave us in May the cost of demolition and construction of the building at $139 million. That's what they told us.
So an audit, I believe that's correct, and an audit done of the building before the CFPB existed indicated that the work done on it at that point required $107 million worth of work,
and then on top
there's actually more that's deteriorated since.
Right. So on top of the $139, you have the lease of the temporary space of $22 million. On top of that is the utility and securities for $13 million. The combined amount on the 3 task orders already is $9.2 million. Some other things for about $400,000. So you add it all up, and right now we are at $184, give or take, million. This is from your staff and from other places. That's a ballpark figure?
Again, that's including a lot of things that are not cost of construction. There are other things. The reason
this is what it will cost to go from the dump that you're in to a building that you just told the Senate, even after we spend this money, in your own words, is still not optimal. Is that correct?
I would say it'll be good, not optimal. That's correct. Yes.
Okay. In January, you told the chairman the number that we're looking at is around about $70 million at that point in time. That was your testimony here for the cost. Maybe you were just basing that off of the $55 million as the placeholder. Be that as it may, we're now
I don't recall that. I'd be interested in seeing that.
Okay. Be that as it may, we're now at $184 million. Depending on how you break down the cost of that on a square footage cost, it's more than double of what any commercial luxury property in D.C. is. Do you think that's a prudential way of handling this matter? Are you?
But now you're into apples and oranges. That's not a square footage cost. The construction is a square footage cost. You're including things. We moved out of the building in order to avoid additional costs that would have occurred if we had renovated in place. That was going to be more expensive. That was what was determined. So we're attempting to be prudent here.
Well, even this is a $153 million building. Even if you save off, $10 or $20 million here for your relocation costs, you're basically taking a $153 million building and spending around $153 million to refurbish it and make it into a nothing more than an optimal building.
You want me to describe the condition of the building? We'd be glad to have
No,
you
I
come and
understand
have
it's
a
terrible.
tour. If you could
question-
take an hour, we'll have you come and take a
Yeah.
tour. I'd love to have you do that.
So do you think it was a bad decision by either you or your predecessors in 2011 and when they entered into a 20-year as-is contract on this building, knowing that this building is a dump? Why would anybody from your agency enter into such a contract? And would any of the agencies that you have oversight of be chastised for entering into contracts like this?
So the rent that we're paying takes account of the fact that we're responsible for the renovations. That's a somewhat unusual arrangement. Usually the landlord would renovate and the tenant would not. But our rent was calibrated off of that. So over the 30 years of the occupancy agreement, it comes out to be appropriate rent for essentially a Class B building, which is about what we'll manage to be. The other thing is it is a government-owned asset. I mean, we could just let it deteriorate into a white elephant.
You had this
and
all over to do
sore,
again. If you were just coming in, would you have done the exact same thing, rent a building like this, and then spend $184 billion to redo it? Or would you do something different?
I think I probably would. I think it's still the right answer. But, you know, there are obviously challenges. And if I could describe, you want me to describe the condition of the building?
No,
you want to come see it?
my time is up, but I think that's probably
Feel
the wrong...
free to come see it. We'd like that.
I think, Mr. Chairman, I think that is probably the wrong answer to hear, that a bad decision that was made back in 2011 or 2010 would be replicated today.
Time of the gentleman has expired. Chair now recognizes the gentleman from Massachusetts, Mr. Capuano, ranking member. No, apparently. The chair now recognizes the gentleman from New York, Mr. Meigs, for 5 minutes.
Thank you, Mr. Chairman. And I want to first thank you, Director Cordray, for the great work that you're doing at the CFPB, you know, on behalf of course, everybody in the 5th Congressional District, but I think for working Americans, our veterans, our college students, and elderly women and minorities, and the list can continue. You know, I was just informed that, for example, in just 2 years, your enforcement actions have resulted in almost $4 billion directly refunded to more than 12.6 million consumers and service members. You know, that's to me is really remarkable, and we want to thank you for that kind of work, as well as, you know, a balanced approach that you've taken in various rules that the Bureau has established. You, I believe, have listened very carefully and addressed many legitimate concerns that were brought to your attention. And I just want to encourage you to continue in that spirit with the goal of achieving greater small business and non-bank lenders' participation in advisory councils and greater transparency in how these councils work and dissipate information. And I also just want to make sure that I mention that I welcome your continued resolve and commitment to get to the bottom of the internal management issues that had surfaced recently, and I trust that you will do that. My first question is this. You know, I've always had some concerns about the effect of the QM rules, especially as it deals with minority borrowers and the ability to borrow, et cetera. I'd just like to get 6 months now or 6 months after the rule have become effective. Could you give me your thoughts on the effects of the QM rule, particularly for...
Sure. And we are a few months in now, and we're starting to get some data. We're working very closely with groups like the National Association of Realtors, which have been eager to provide data and let us see exactly what's happening in the marketplace, and mortgage bankers. There was a great article in the American Banker yesterday that I thought encapsulated it well. And what it indicated was that the QM rule is having negligible effects on access to credit. More than 95% of the mortgages being offered are, in fact, QM. And in fact, they said 6 months later, has this really made a negative difference? They couldn't tell. There were a lot of people quoted around the country, including some who said they make hundreds or thousands of mortgages and maybe only a few dozen have been affected. So look, we tried hard to strike the balance in a way that was not going to undermine the mortgage market. I think we have done so. I think people across the spectrum in industry have recognized that we've done so, particularly the patch for the Fannie and Freddie in conservatorship has made an enormous difference. But we're eager to hear more. And if there are unintended consequences or unexpected results, we want to know about them and see what we can do to address them.
On that line and dealing with the American Banker, I think that they made in their assessment that it was largely due to FHA and GSEs that can still largely, they said, I think, operate under approved exemptions.
They can.
I was wondering, how do we prepare for when the FHA and GSEs begin to retract in the market participation? What do we?
That's a really great question. One of the things we had to do when we wrote the mortgage rules was we didn't know exactly what Congress was going to do about the GSEs or about the FHA program. And so we tried to create some latitude. Congress eventually will settle those issues, not us. And we had to write a rule that could be flexible to take account of whatever Congress would do. That's ultimately up to you all, but I think our rules have allowed Congress to have the latitude to act, and the rules could continue to operate. And I think people have recognized that was a very important step we took, and it's really helped those rules be much more successful than they might have been otherwise.
Let me go on to another question in the little time I have left, because your job is real tough, and I know it's not always easy to get it right. On the one hand, we know that close to 70 million Americans are underbanked and don't have access to the traditional banking system, and therefore sometimes rely on less regulated entities for financial services. And on the other hand, they are also more vulnerable and are more easily taken advantage of by these less regulated entities. So how do we balance access to credit, which for many equals access to opportunities, versus protecting Americans from predatory financial products and services?
That is a central issue, a core issue for the Bureau now. Our Office of Financial Empowerment is very focused on that issue. We're working with the FDIC, who's had a lot of focus on the unbanked and underbanked issues. The prepaid card rule that we're developing will be very important in that respect. And I think some of the other work I see going on around the country. The New York Attorney General yesterday announced an initiative with Capital One with respect to check systems and people being barred from the checking account system. These are things that are important for us all to work on together and make sure that more Americans can have access to the banking system, which is a great way to protect them, or if they don't have access to the banking system for whatever reason, including that they just don't want to be in a bank, they have tools and opportunities available to them that can work for them. We had a field hearing in New Orleans last week on mobile payments. That's a potential promising technology as well, and we want it to be a pro-consumer technology.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from Texas, Mr. Nagelbauer, the chair of our Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Director Cordray, I think we've been talking about this data collection, and so I guess one of the questions is, where are you getting this data from?
We buy it from the same commercial sources that everybody else buys it from.
What are the names of those vendors?
I don't recall offhand, but be happy to get those to you and to your staff. There also are times where, and if you're talking about different types of information, there are times when we go directly to institutions and make efforts to do voluntary collections from them and work with them to try to make sure those are not unduly burdensome. There are times where we collect information through the supervisory process. So, you know, there are lots of places where we can get information, and we try to be careful about handling it carefully.
So I think when you testified before, one of the things I pointed out is I'm not sure who's going to win the race on who's collecting the most data, NSA or your agency. Now that we've restricted the amount of data that NSA, I think you're going to win that contest. I think what the question that comes to my mind is I mean, you're tracking millions of mortgages, 990 million credit card accounts, and the question begs, why are you collecting this much data when, if you say it's just for research purposes, most researchers take samplings? And it looks like to me it would be much more cost effective to take a sampling of data that you're going to have to redact. But when you talk about the number of records that you're talking about collecting and redacting those kind of records and making sure that the personal identifiers are not there, it appears to me there's going to be a huge cost for something. And so the research answer doesn't really seem to resonate here, or you wouldn't be collecting that size of data.
Yeah, and you raised this point with me in a private conversation we had some months ago, and it was a good point, and we went back and thought further about it, and I think we've made more progress on it. The National Mortgage Database we're talking about, we're only going to collect data on 5% of mortgages. We're going to do a sampling, just as you said, for the reasons you said, and we can collect a limited amount of information for that purpose. On the credit card, there are times where when we go to institutions, they tell us, look, it would just be easier for you to tell us to give it all to you rather than making us do the cost of making some sort of slice of it, and it may or may not be objectively, statistically, unbiased, et cetera. So sometimes they tell us it's easier for them just to give us what we're asking for rather than do a lot of work to sort through it. But where we can do sampling, and on the National Mortgage Database, that's exactly what we're doing, limiting ourselves to 5%. But if it's a reasonable sample, that'll do the job, just as you had indicated to me when we had this discussion. We will continue to try to do that where that's sufficient.
And the other issue continues to be, I think, our great concern is someone that's collecting a huge amount of data is that you're collecting is the security of that data. I think at a presentation on June 11th, 2003, Bob Avery, the FFA's project director for National Mortgage Database, stated the following: said, "We believe that we want to create this data set, a wide set of users as possible, so that there are major challenges with of keeping this data secure." And he says it is easy to reverse engineer and identify the people in our database. And I know you keep hanging your hat on, hey, we're redacting the personal identifiers, but here's the guy that's overseeing the project, and he said it's very easy to reverse engineer that. I mean, so that doesn't give me a lot of confidence.
But that's a quote. There's a longer passage there in which he says it could be easy, but there are things we're doing, et cetera, et cetera. Had the same quote over in the Senate and made the same point. If you read the whole passage, you'll see we're all aware of the problem. We're concerned about the problem. We recognize the risk it could pose to our agencies if we foul that up and mess that up, and we're working hard to avoid those results. So it is a challenge. I don't want to in any way minimize that. It's a challenge that I'm as concerned about as you are, because the reputation of our agency is on the line, and we're working hard to try to address it. And I believe if you look at Mr. Avery's full statement, that was his outlook as well.
A lot of the financial institutions that you regulate have to issue privacy statements to people to let them know that, hey, we've got a lot of personal data on you, and here's our... Are you giving the American people a privacy statement about all the data that you're holding on them?
Actually, what we're trying to do is minimize the burden on industry of those annual privacy notices, and some of your colleagues have been pursuing legislation on this. We've proposed a regulation to accomplish the same purpose, and I think it will actually be beneficial. In terms of what we're doing, again, this is de-identified information. What industry does is something different. They're interested in, Representative Neugebauer, what is your spending habits? What do you do? They want all to know all about you. We don't care to know about you or me. We want to know about how the general pattern of consumers is affected. De-identified information, that's a very different issue than the privacy issues of individual information that's personal to me.
Time of the gentleman has expired. Now the chair recognizes the gentleman from Massachusetts, Mr. Capuano, the ranking member of the Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Thank you, Ms. Cordray. Ms. Cordray, I want to follow up a little bit on Representative Neugebauer's questions on data. Do you keep this data for long periods of time?
I believe we will keep it for long periods of time, yes.
Do you share it with any other agency?
So we use this data for our own research purposes, both on the credit card market and the mortgage market, and frankly, it's critical data. If we don't have it,
I understand. I'm not against the concept.
Yeah.
I want to know if you're sharing it with anyone else.
Okay. So it depends. The National Mortgage Database is a joint project of the CFPB and the Federal Housing Finance Administration. So that is a joint project by definition, so we're sharing information. On the other, our consumer credit panel and credit card database, that's something we use. I don't honestly know if we're sharing it with anyone, but I think
Is the information being shared with the IRS?
Not that I'm aware of.
Is it being shared with the NSA?
I don't know. I'm quite sure it's not.
All right, because I don't mind you collecting the data to some extent for the purposes that you describe them. I do prefer sampling. I think that's the better way to go, and you've said you're heading that way.
Yeah.
But I would object incredibly strongly to having that information shared beyond those parameters. And honestly, why are you keeping any of the data? Once you do your research, why keep it?
Because it's ongoing work that we're having to do. We need to see what's happening in the mortgage market over time. It isn't just...
I understand where you would keep the results, the conglomeration of the data. So you collect 1 year, you conglomerate it, see how many mortgages, how many people. I get that. Keep that. Why keep the individual data?
Well, again, it's the pattern of data that we're keeping, and the pattern of how markets are affected.
Are you keeping my individual mortgage data for 20 years?
De-identified, so nobody would have any idea that it's you or me.
Yeah, I've heard that before.
So,
and
well, that's
and I love you, and you know I support the agency. I don't trust that answer from a governmental agency.
I'll tell you what, we'd be happy to have our staff brief your staff.
I would very much like to.
detail
I'm
on
very supportive of what you do. I'm supportive of you doing research. I am not supportive of anyone gathering additional data that is unnecessary or kept for inappropriate time periods.
Fair enough.
Fair enough.
Fair enough. Okay.
Mr. Cordray, the last time, actually, you weren't here because at that time you weren't allowed to come to the committee, but there were others from your agency. The last fight I had to do with QM because I asked a very simple question. At the time, people were saying, oh, my God, QM, it's going to disqualify 40% of the people who are currently eligible for mortgages from ever getting a mortgage. Has that happened?
There were people who said that it would double the cost of a mortgage and
Yes.
cut the market in half. That was absolutely wrong, and the American Banker article just yesterday interestingly verified that the market is about the same as it was before QM, but with more protections in place.
So
and it's at a
QM did
negligible
not
cost.
kill the situation. It actually helped consumers. Do you think that's a fair assumption, a fair conclusion?
The housing market is challenged right now, and it has to do with things like the interest rate pop-up last summer and the winter and other things that people have pointed to. But the QM has not killed the mortgage market. I think it strengthens the mortgage market over time by giving people more confidence.
QM
in
has
it.
done exactly what it was intended to do without having a negative impact on the market.
I believe so. And if there are unintended consequences revealed to us, and we're in close contact with people like the mortgage bankers, realtors, et cetera, we will take account of those issues.
Well, I ask you that because I have not had a single complaint about the impact of QM on individual borrowers or on the housing market itself. And I'm just curious, you're collecting all this data, you know more than me.
Yeah.
So I want to ask.
I'm glad to hear it, and it's consistent with what we
Well, actually, I don't hear it, which is good. I only hear bad things. I don't hear good things.
That's kind of us, too.
Last question, Mr. Cordray. When did you get appointed again? Tell me the year.
Beg your pardon?
What year were you appointed?
Well,
the first time.
Complicated question. So I was recess appointed in January of 2012.
2012.
I had been blocked in the Senate. I was blocked again in the
No,
Senate.
I know that. But
I was finally confirmed July of 2013.
I'm just wondering if when you were appointed, were you in this hearing room before it was redone?
That guy's picture wasn't on the wall then. He was sitting.
Well, because we had a major remodel of this hearing room just a few years ago, and actually one prior to that a few years before, because when I first on the committee, I was down on that seat, and it was a folding table, as was the other side. It wasn't just
I know there's a lot of work being done in the Cannon building.
Do you
I'm
think
sure
that we
it's quite
should have done this room over? You think we should have left it in the way that it was?
Up to you all. It's a nice room.
Well, it is kind of a nice room. It's actually, the colors are very pretty. I guess what I'm saying and trying to make the point is, working in a decent work environment isn't such a bad thing for anybody to get their job done. Keep doing it.
Time of the gentleman has expired. Chair now recognizes the gentleman from California, Mr. Campbell, the chair of our Monetary Policy Subcommittee.
Thank you, Mr. Chairman. Continuing on that theme, Director Cordray, and not to beat it to death, but again to read that this new building of yours will have a raised water table flowing over a water wall of naturally split granite. At this southern edge, a new water source creates a cascade of water that flows down the water wall into the sunken garden, terminating in a raised splash pool. More slabs of granite rest in the bottom of this pool. I thought this room was fine before. I don't see any waterfalls here, but the question I have is, how does that serve your mission of consumer protection?
Look, that's been quoted back at me. I feel like somebody, if you'd found some of my old poetry I wrote when I was a kid, it would be embarrassing to have that read in a public hearing. This was the kind of puffery that was working through government permitting processes and trying to get business from the Bureau. The reality is you could describe probably any two-bit fountain in any corner square of any part of the country in the same glowing terms if you wished to do so. But the building is a dump. I invite you to send your staff to take a look at it and get a sense of what it really is.
This is outside.
Yeah.
Nobody works outside. Did you?
There's not going to be a lot of cost expended on that.
A couple of trees and
sounds
some grass?
wonderful, but that's not going to be a lot of cost expended on that, I can tell you that.
The point of all this, because I could read more of this and it goes on, there's a removed space of rest and contemplation. I thought this was a workplace, but who approved? We've established that there's at least $185 million being spent on this. Who approved this?
Well, again, we're mixing apples and oranges in those numbers.
No,
it's not being spent on renovating the building.
I understand
it's
that includes moving away your rent for wherever while it's being redone and then moving back. It includes all those expenses. But so say it's 139 mil, whatever the number is. Who approved that?
So whoever was the leadership of the Bureau at different times approved that, including most recently for an extended period of time, myself.
And who outside of the Bureau would have had to review or approve that?
So there's been various permitting process we have to work through. We're now working with GS.
To spend the money.
Frankly, in part to give me comfort around that this is being handled professionally and appropriately. GSA is now involved in the renovation, and they're the experts in the federal government work, as I understand it.
But to spend $185 million of taxpayer money, who outside of this Bureau had to approve that? Not the permits.
Well, I approve it, and Congress oversees me vigorously.
Oh, really?
Yes.
Really? And
like
what can we do
right
about
now.
your budget? Suppose we don't think you should spend this $185 million. What can we do about it?
I suppose you could change the law.
Ah, I guess we could, but no one approves your budget. The point is here that in this Bureau you could spend $200 million of taxpayer money without anybody outside the Bureau having the ability to change it, approve it, review it, or say no. Director Cordray, it is my time. It is my time. That is
not accurate.
Is unaccountability, and that is the problem with this Bureau. They can't do that in the Pentagon.
If I could correct the record, we have a GAO audit every year. They have to review what we do, and they can call us out for misspending. We have the Inspector General does regular reviews of us and has reviewed our budget process. We have an independent audit that Congress laid on us.
And they're not cutting or approving this before you do it, are they?
They are looking at our budgeting process and our spending process. So, yes,
Director
this is part
Cordray,
of what we're doing.
The point I'm making here is, regardless of the mission of this thing and the noble mission for which it was created, the problem with this agency is your unaccountability to anybody outside of the agency. And that wouldn't matter if that's in government or in a private industry or anywhere else. That is a structural problem that you can't have exist. And when I look at your agency now, one of the things you're supposed to do is stop discrimination, but yet you are discriminating within the agency, and then you are collecting data that enables discrimination out in the world where it doesn't currently exist. You were established because of overspending on housing, but yet in my and a lot of views up here, you're overspending on your own housing. And then, on top of that, one of the things that consumers are most concerned about, as Mr. Capuano indicated, is invasions of their privacy by banks, by whoever, taking that information and abusing it. But now it appears that you are collecting more of that information, and the public has more to fear from you than they do from the bank, because at least you can sue the bank. It seems like the moral of this agency is do what I say, not what I do. And that is not a good way to run a railroad. I yield back.
Regrettably, the
no
time of the gentleman has expired.
No opportunity to respond to that?
It's the gentleman's time.
Okay.
He did not ask a question. I'm sure that someone on this side of the aisle, Director Cordray, will give you additional time. Chair now recognizes the gentleman from Missouri, Mr. Clay, the ranking member of the Monetary Policy Subcommittee.
Thank you so much, Mr. Chairman, and welcome back, Mr. Cordray. And I don't know, I'm one who feels as though the public does need someone watching out for their best interest. And I will let you take a little bit of my time and respond to my statement that the public does need an umpire or referee, since not too many of us in this body want to be that umpire or referee. Can you respond to that, Mr. Cordray?
Yeah, I appreciate that, Congressman. When the Congress set about to pass the financial reform law, to recognize that everybody suffered in this country greatly through the financial crisis, and people lost jobs, millions of people lost homes, people lost trillions of dollars in household wealth, and in many communities it's been difficult to recover that wealth. The point of that reform was to do a lot of things, and one of them was to make consumer protection in the financial marketplace more front and center, and to give someone the responsibility, and I and the Bureau have this responsibility, to see that people are treated fairly and to stand on their side when they're not. And that is something that we take very seriously. As I said in my opening statement, I am very proud of the nearly 1,400 people who work at the Bureau every day to accomplish some of the things that you've described today. I think it's essential. I think it doesn't take any of us very far. This is a sophisticated body. All of you work on financial services matters, and you're experts in it. But you don't have to think very far to parents or grandparents or cousins or friends or sons and daughters to recognize for a lot of people this is intimidating stuff and it's difficult. And they may or may not know how to get it right, and they may need some protections in the marketplace. And I think that we're trying to do that in a balanced and reasonable way. I think it's mostly been recognized, even by industry, that that's how we've been proceeding. And it's really important because otherwise people end up making a lot of bad decisions
and not to cut you off, but I certainly appreciate the role you play in protecting consumers. And I'm not going to throw you all softball questions, so let's talk about the $10 billion ceiling for direct examination by the CFPB. You know, your IG report came out last March, found that 59% of draft examination reports submitted by regional examination teams during the scope of the IG's evaluation did not meet the CFPB's timeliness requirement for submission within 30 days of field work completion. 90% of the drafts that received headquarters approval as of July 31st, 2013, had not been approved by headquarters within the 30-day requirement. One reasonable takeaway from that is that your examination team is stretched too thin. And at a hearing last year, one of the witnesses recommended that the CFPB's $10 billion threshold for direct examination of financial institutions be raised to a higher level. With the current $10 billion threshold, you have authority over about 80% of all bank assets. If it was a $25 billion threshold, you would have authority over 75% of all bank assets. And if it was $50 billion, they would have direct examination authority over 70% of all bank assets. Let me ask you this. Would you be willing to work with me and other members of this committee to identify a higher direct examination threshold than the current $10 billion?
So I honestly, until you raised it just now, had not given that any thought, because our job is basically to enforce the law as is. Sure. I mean, I know that when the Dodd-Frank bill went through the Congress, there was a lot of debate back and forth over different thresholds, and there's certain thresholds set for some of the financial derivative types of things, and resolution plans and other things are set at a higher level. $10 billion, I guess, was the compromise Congress reached on this, and it feels like it's a workable level. The issue you raised about the timeliness of that particular exam, that was something we struggled with early on as we were staffing up. We've gotten a lot better on it. We went out and sought input and got input from the U.S. Chamber of Commerce on how to approach this. We went to the clearinghouse of banks to get their input. Our Inspector General has done a careful scrub of this process and recommended many changes and improvements, and we've done our own work on this, and I think that's improved enormously. So I think we're getting more efficient. I think we can handle the workload. If Congress wants to think about that, we'd be happy to provide technical assistance, but I don't have a strong position one way or the other on that.
Thank you for your response.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Royce, the chairman of the House Foreign Affairs Committee, for 5 minutes.
Director Cordray, how are you? I've heard criticism that the CFPB is conducting regulation of financial products and services through enforcement actions and through guidance bulletins rather than through notice and comment rulemakings, which of course would include input from the public and input from Congress. Since its doors opened, I think the CFPB has finalized 54 rules, 18 of which were part of congressionally mandated regulations, and at the same time issued 34 bulletins and 23 enforcement actions. So If you take out the congressionally mandated rules, that means the CFPB issued the same number about of rules as it did bulletins. 36 rules, 34 bulletins. The 23 enforcement actions often include specific business reforms. So the CFPB promotes the bulletins as statements of law and policy, and the enforcement actions as deterrents. Yet in both cases, the agency appears to be making policy without obtaining public input, if you follow my logic on that. So if the CFPB intends to impose specific new requirements, would it not be better for the agency to use the rulemaking process, which has the benefit here of notice and comment periods, rather than enforcement actions and bulletins?
So we can do that, and of course are required by law to do that in appropriate instances, particularly where we're making substantive changes in the law pursuant to congressional delegation. On enforcement actions in particular, I don't think there's a law enforcement agency in America that requires a notice and comment process before engaging in enforcement action, because you're by definition responding to potential violations of the law, and having that drag along while you're allowing lawbreakers to operate is not appropriate. I don't think that would be. I think the issue that you raise is around some of our guidance and bulletins and whether those should be done with notice and comment. So they're not required to do so. There have been lots of instances where we have put things out for notice and comment. We've done a lot of requests for information to get a lot of input from people, and we're very accessible to people. We have so far tried to hew very closely to what we understand the law to be in this area, which is notice and comment for substantive administrative rules, and not for guidances where we're simply clarifying and laying out the law as it's already, we believe, understood. I believe the U.S. Supreme Court has just granted a case around interpretive rules where they're going to, sometimes this is a difficult line to draw, and they're going to try to clarify that next term.
But let me just walk you through sort of
Sure.
example here, because
Yeah.
Regulation conducted through enforcement often results in confusion. So I'll give you an example, and I think confusion can be harmful to consumers. So by way of example, the CFPB has issued 4 enforcement orders against banks in connection with the marketing of debt protection products. Each of the enforcement actions imposed quite different remedial measures. So banks, of course, under this circumstance, are not certain of what is required of them to safely sell these products. Many have stopped offering the products to consumers. And then a subsequent bulletin related to add-on products did not resolve this uncertainty. So hence the thought here. If you could clarify the agency's position on debt protection products so the financial services industry could understand what is expected in connection with these products, and does the CFPB have concerns about debt protection products themselves or just how these products are marketed. But the fact that every case is handled differently with different remedial measures leaves that big question mark.
So it's a fair concern. The remedial measures depend critically on the facts and circumstances of that matter. If the institution was marketing these things, telling people that they were signed up when they weren't, that's going to get a certain response. If they're telling them that the product did this and it didn't,
I hear you. There could be 4 examples, but I've been told that other federal agencies often enlist the use of advisory opinions to help businesses seeking clarification on specific practices. Would the CFPB consider issuing similar advisory opinions? Because then you might have them know on the front end exactly what was expected, what wasn't, and you wouldn't have arguably 4 different results.
That is something we're working to do in appropriate cases, and the SEC has done some things, and we've looked at other agencies, and I do think we can probably do more in this area, yes.
Yeah, I think that would move you more towards the input from the public and input from Congress, and input especially with respect to those that are going to be impacted, understanding exactly where you're going with your rulemaking. Thank you.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. McCarthy, 5 minutes.
Thank you, Mr. Chairman, and I appreciate that. Welcome. It's funny. When I first got here, a lot of people said I had too much common sense, and that doesn't fit into Congress. And while we were talking about the renovation of your building, I'm thinking about Cannon, which is actually all our buildings are old. They've already moved out the support staff down in the basements over to another building that they had to renovate so that even members will be going over there, either on this new Congress that will be coming up. Certainly, I live in an older home that was my parents', and 2 years ago I had to do some renovations. And of course, every time you did a renovation, something else popped up, so it ended up costing at least 15% more than I had budgeted for. But I also want to thank you for the work. And I think it's important that we get back to where and why we wanted to have oversight to protect our constituents. I'm sure here, members, many a time, would get calls from constituents to be able to straighten out something that either happened with their financial institution or a credit card. And of course, we would try to solve that. But now we actually have a area where even the members of Congress can go with the problems that our constituents are coming to. But to get back down to what you've been doing, in your testimony you mentioned that the CFPB has been able to refund consumers, which is taxpayers' money, who were victims of violations of consumer financial protection laws by over $3.8 billion. That's a lot of money to come back to the consumer, into their pockets. You mentioned that the CFPB took action against a payday lender for overcharging service members. That's extremely important because our service members have been taken advantage of, especially those that were overseas. Can you go into further detail of how the CFPB took action in that case? And just to say thank you for trying to educate our constituents on financial literacy. I've been working on that for years, not only in this committee, but on the Educational Committee, because that, to me, is the most important thing that we can do for our consumers so they don't get into debt or being taken advantage of. So with that, I'd like to hear your response.
Sure. In terms of service members, we've been blessed because we have a tremendous head of our Office of Service Member Affairs, Ms. Holly Petraeus, and she and her team have done great work across the country, bringing back information and stories and problems that active duty service members, their families, veterans, and their families have brought to our attention. Some of them are the general consumer problems. Some of them are made particularly pointed by being an active duty service member. And we've been working with the Department of Defense on new rules under the Military Lending Act that I think will really strengthen what's been done there. And that's great work, and it's important work, and we're glad to be doing it. On the financial literacy front, we're working with service members in particular on an initiative, financial fitness coaching program for them. And we're doing a lot of things with the Pentagon and the Veterans Administration. I just signed something the other day where Assistant Director Petraeus and her team are going to be working with Department of Education, Department of Defense, Department of Veterans Affairs around the principles of excellence for making sure that GI Bill money is being used effectively so that service members really get the benefit they're promised of a meaningful education that will advance them in life rather than having it squandered on things that don't provide value. And so that's important. In general, financial literacy is something we don't do enough of in this country, and I know that's a bipartisan issue among members of this committee and members of the Congress, but it's something at the state and local level. People have to recognize the need to do more. You can't send our 18, 19-year-olds out into the world with no basis to go on and no understanding of the kind of big decisions they're going to be expected to make and think that that's somehow going to succeed. It doesn't succeed. It didn't in the run-up to the financial crisis, and it won't now, and it's something that has to change.
We have found in our communities on Long Island that those, especially first-time home buyers, if they go through some of the nonprofits and actually learn, it's not just a mortgage, it's the insurance, it's utilities, it's everything that goes with it. Many of us feel that a lot of people that got mortgages should have never gotten them, and that I blame on the bankers because they didn't look close enough. And unfortunately, that's what caused so much pain in this country, and it continues. The problem has not been solved yet. We're getting there, but it's still something. Thank you for your service.
Time of the gentlelady has expired. The chair now recognizes the gentleman from New Mexico, Mr. Pierce, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Cordray, for being here. Mr. Cordray, following up with the questions from the gentlelady from West Virginia, you had mentioned that there are items that you de-identify. Are you going to put that into the Federal Register? You're going to say publicly that you are going to buy the data, but then you're going to de-identify it?
We're going to continue to work with the FHFA. Both of us have been listening carefully, not only to hearings like this and testimonies, but also questions for the record and inquiries from this committee.
Okay.
And we will be very responsive about that.
Because what I'm reading in this is that it says right now that the records in the system may include without limitation, and so if you do not identify those limitations, then later people can come back and say, well, hey, we told you we're going to collect this stuff and we're going to use it how we want to. And so unless you correct the record, and by the way, taking exception to something you had said earlier, you said it's going to be a very small select group that has access to it. One page over it says a whole list of people who have access, but in one spot it says the contractor personnel, grantees, volunteers, interns, and others performing work on the contract. So it doesn't, and it identifies the project with the FHFA. So it doesn't sound like it's such a limited group that will be able to look at it. Now, one of so I'm reading in your book here that you're protecting consumers from unfair, deceptive, abusive acts, practices. And so one of the unfairnesses has come because of the Federal Reserve driving the interest rate to zero. We had a kind of a round of questions with a previous witness, and he simply said, well, there is collateral damage. And I think that this idea that seniors who have saved, and they generally use very unsophisticated products, and so usually it's a savings account, and when they get zero, now then they tell me in the town halls they saved enough for retirement. So have you visited with the Federal Reserve about this abusive, unfair practice of driving the interest rate to zero where the seniors get nothing? Have you visited with the Federal Reserve?
So on your previous point, if I'm hearing you, I'm understanding, you'll want us to come back to you and keep you posted as we go in the National Mortgage Database. It'll be a much more limited group of people who have access to that, and we'll keep you posted on the issues you raised.
Yeah, I don't see how that addresses the question I'm asking.
No, I know. And the current question, if you want me to respond to it, there's no question that low interest rates hurt savers who are trying to live off the money they have saved. And this is part of the residue of the financial crisis. If we hadn't had the financial crisis, interest rates wouldn't have had to plunge.
Okay.
They've been at zero for 5
years. Believe me, I really do think somebody should be talking to the Federal Reserve because they're printing money and driving interest rates down, which hurts the poor, and hurts the seniors. Now, under your watch, the agency has decreased the number of seller financing from 3 to 1. Now, in my district, about half the houses are trailer houses, and what happens is people during their lifetime, they accumulate these mobile homes. Banks generally won't loan money on them. A lot of times they're pretty old. People would move into them, so it's that whole idea that we would have access, one of your other deals, access to credit. And so why are you taking such a limiting stance on seller financing? Because that's the way that many trailer houses are sold. I don't think any banks are ever going to come from New York or Massachusetts or anywhere and come out to New Mexico and lend money on these 30 or 40-year-old trailer houses. But some of the low-end consumers, people who are really struggling to get by, my district has per capita income about $30,000, so you can guess that there are a lot of people living on 15 or 20. So why did you do that? Why are you making it so difficult for people to sell these houses, number one, and get their money out of them?
So I'm honestly not sure what to say to you on that issue. I'm making a star on that we need to come back to you. And if seller financing in particular is a problem, then I'd like to understand how our rules may be affected.
Because what happens basically is people then have to sell them when they get older to a group, and they get stripped of their asset value.
Yeah.
Now, my last thing here is I'm holding up a summons here, and so at summons, I think you'd use the words intimidating stuff, not with respect to summonses, but included in the second page is the sentence, and all the things they're supposed to provide, but then you're not required to produce any records in response to the summons. Isn't that deceptive? This is coming from our IRS. And so, again, in protecting consumers, protecting people, these are pretty abusive practices. They deal with the financial world because that. Do you ever visit with the IRS on stuff like this?
I don't have jurisdiction over the other government agencies, so no, I don't. Be happy to see and read what you're
Just in closing,
about.
Mr. Chairman, thank you, but it looks like that we're going to protect consumers from everybody but the government.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Sherman, for 5 minutes.
Okay. One comment in support of the Fed. People say, oh, we should have higher interest rates so I can live on my savings. But when we had 6% interest rates, we had 6% inflation. So they were really invading their principal in that the value of their principal was declining by 6% each year. Today we have real interest rates of 2%, and it's real interest rate. So perhaps if we had financial literacy, people would understand that if you're getting a 5% or 6% nominal return at a time of 5 or 6% inflation, you're really earning nothing. You're invading your principal by seeing it decline in its purchasing power. Speaking of financial literacy, I'm all for it, Mr. Caudry, but I hope that you would write rules and industry would engage in practices that were fair enough and transparent enough so even people who had not yet benefited from your financial literacy would not be taken advantage of. I don't want to see this financial literacy mantra to be a replacement for fair disclosure and honest practices. As to your building, if you can make it cheaper, you can make a change, you'll make us happy. You'll never have a structure that will allow you to compete with the private law firms and their beautiful offices, but you'll be able to recruit from those law firms or get good people because you're doing the Lord's work, not because you have a heavenly building.
You're right that the advantage for us in recruiting is our mission. People want to come to work to protect consumers, and you know, we're going to have a decent building. We'll never
I understand. I want to quickly go on to a question here. It's been significant dissatisfaction here in this room with the guidance that you've provided about indirect auto leasing, particular concern about how you are basing this guidance on on methodology that at least our chairman says he can't get explained, and sends letter after letter to you, Freedom of Information Act requests. Would you consider another study that would be based on methodology so convincing that you'd be willing to share the methodology and the data with Congress?
So again, you know, it's been a source of, I think, some frustration to the committee and to me and to the Bureau that we've been back and forth on different kinds of information about this, and we think we're providing a lot of information, but people identify other information that they want. Partly as a result of that, we are going to put out a white paper on the proxy methodology to try to address that very directly later this summer. We'll continue to try to be responsive on this. The reality is the auto industry and the auto lenders, they know all about this because they're constantly having to monitor
Well, if they know all about it, why don't you answer the chairman's question so he can know all about it?
I mean, I think that we're on the same page. They have to fend off private lawsuits, whether the CFPB ever existed or not, and they have had private lawsuits, and they've had to pay out and make changes, and they do the same analysis that we do, I believe. We've had lots of discussions with them. We'll be glad to have more. It's an ongoing dialogue.
I would hope that you would, it's my understanding that the Bureau is threatening enforcement actions for failure to comply with its interpretation of the law as set forth in an informal guidance. And I hope that you would replace that guidance with a real regulation that goes through the real process, with a methodology that's open, that you're proud of. And I would point out that as things exist now, your guidance may not only guide you, but it may also guide the courts. So something you put out that you say, well, this is just a press release, okay, a long press release, it may not guide us. Somebody is using in court, and millions of dollars of changing hands, and companies are changing their practices. This is an important area. Let's go back and do the full work.
If people want to bring us thoughts about a rule, including people from the industry, we'll certainly welcome any input and give it some careful consideration.
And be willing to go through the administrative procedure process to draft a regulation?
Want to work through what the issues are and what can be done, but we're happy to hear from people, and we welcome that.
And then finally, I want to say that we recently passed legislation that I co-sponsored to have a small business advisory board. Look forward to that actually being done, whether the Senate passes the legislation or not. And I hope that you will include somebody from the title industry, as that plays such an important role in the real estate transactions. If
there's anybody from the title industry that you think hasn't been able to access us and meet with us and talk to us, I'd be glad to hear about it. I think we're trying to be very accessible.
Thank you.
Gentleman's time's expired. We'll now go to the Vice Chairman of the Oversight Subcommittee, Mr. Fitzpatrick of Pennsylvania.
Thank the Chairman, and thank you, Mr. Cordray, for your time today. I wanted to follow up on some of these questions having to do with the rulemaking of CFPB and the white papers that are issued, and ultimately the underlying methodologies that Mr. Sherman was talking about, but also the data. Last week, Mr. Cordray, this committee passed out to the House floor a bill that I sponsored called the Bureau of Research Transparency Act. And we feel the bill is necessary because the CFPB portrays itself as being a, quote, data-driven agency. However, over the past 2 years, it's become clear that when the CFPB wishes to engage in a rulemaking in a particular area, it first releases a purportedly objective white paper on the issue. Invariably, research papers conclude that regulations are necessary, press releases are issued, then the media is driven by the press release and then used to come back to try to create some momentum for the proposed rulemaking. Many have picked up on this pattern at the CFPB, and it's difficult to prove that the CFPB's research is faulty because the Bureau often refuses to subject its work to peer review or to release its methodology or the underlying data. By requiring the CFPB to release its work publicly, the bill that I've sponsored will allow interested parties the opportunity to review the Bureau's work, ensure that its findings are supported by the data itself. So the bill, in my view, it improves the rulemaking process by ensuring that its policy prescriptions are supported by objective and unbiased research. So I'm not going to ask you to comment on a specific piece of legislation, but I would ask you just a couple of general questions. The first is, does anything prevent the CFPB from obtaining the data that you feel you need separately through the OMB approval and public comment requirements of the Paperwork Reduction Act?
So we have been complying with the Paperwork Reduction Act. That's part of the constraints upon our agency, and we have worked with OMB for some collections, and then there's certain ones that are exempt from the Act, limited ones. We also have the supervisory authority, which is a method of gathering information related to supervision of particular institutions. There's a variety of different sources there, and we've done voluntary collections from industry where they, in many cases, have been responsive to us.
So the bill, Mr. Cordray, simply says that the data must be available to the public. Your agency will have some discretion on how to implement the law, even by rulemaking. Is that not correct?
We'll have some discretion, yes. Mm-hmm.
I want to use the couple minutes I have left. I want to get a separate issue. The O&I subcommittee will be meeting later this afternoon. Pursuant to subpoena, a couple of the employees of the Bureau will be testifying about. And in your opening statements, I appreciate your concern about the process, about the allegations of discrimination within the agency. So there are some that are coming forward today. There are others, employees of the Bureau, that are much more reluctant. They're concerned, I guess, about their futures within the Bureau. They have given some statements to the committee, and even though they're either unable or not willing or afraid to come forward, I do want to make sure that they have, all those employees do have voice on this committee.
I do too, yes.
And I just want to read the statement of one of the employees. Wanted to share her story. I'm an employee at the Consumer Financial Protection Bureau, and I write to share my experience at the CFPB with you. I wish to remain anonymous due to fear of retaliation from the CFPB management. I'm a minority employee on term status, and I joined the Bureau in the Office of Consumer Response. Sadly, though, since my appointment, I've experienced discrimination by the Bureau at the hands of the very same managers who were the subject at the first hearing where Angela Martin testified. Unfortunately, my story is not unique, and I'm one of many minority employees who have suffered discrimination at the CFPB. Like many of my colleagues, I believe that the CFPB was a meritocracy and that I could excel and obtain permanent status if I consistently did good work and improved process and procedures at the Bureau. However, I quickly learned that I was wrong. I suffered retaliation and discrimination by the CFPB managers whenever I questioned the status quo or when I suggested improvements by the way the Bureau handles consumer complaints. So I would just ask, Mr. Director, as you go forward to improve the process and protect the employees, consider that there are many employees who, for a variety of reasons, have been unwilling or incapable of coming forward, and ask you to consider them as well.
I will. We're working to resolve individual grievances through the appropriate process, and for those who wish to remain anonymous, if there's ways for us to try to address the general problems that they're describing, we're interested in doing so.
Thank you, sir.
Gentleman's time has expired. Mr. Scott of Georgia is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Carteret, I think that you have been made aware of the committee, how interested we are in working with you in resolving the auto dealers issue. It's gone on way too long. The auto industry is in limbo, the dealers are. So we encourage you to resolve this issue. I spoke to you about that before, and it's good to see that you are at least working through it. Sit down with them. Let's work this thing out, get it off the table so they can go about their business and not be threatened with indirect
lending. I do welcome
lending.
the opportunity to spend time on this.
Sure.
Yes.
Now, I want you to ask your help on something else, because we're doing things out here, particularly for mortgages and helping people. Are you familiar with what we call the Hardest Hit program?
I am, yes.
Okay. Now, I want to ask you to help us in Georgia here, because I've sort of taken a leadership in that. In August, we're putting together an event in which we will have an emphasis on that. And I would appreciate very much if you would put a call down to Georgia's Department of Community Affairs. If you would do that and offer your assistance. Here is the issue. The issue is this. When we got this program, we got it for about $6 billion to hit for the hardest hit 17 or 19 states in the nation. Georgia's share of that was $339 million. Here is the kicker. If we don't use that money within the next 29 months, it comes back to the Treasury. We need your encouragement. I mean, this is money that is there. We got this on because a number of us on this committee held up the Dodd-Frank bill because we said we can't just throw money up at Wall Street and think that's going to handle without helping the struggling homeowners. And so we got this money. And Georgia spent maybe $139 million of it. So we got $200 million left down there, and if we don't get that out in the next 28 months, it comes back to the Treasury. So in August, we're putting together an event. The Department of Community Affairs is the group that's handling it. Now, you must understand this point, that my state sat on that money for a year and did nothing until we lit a fire under them. I'm saying to you, spring into action with us. It's not going to hurt you to put a call down there. You're there to protect the consumers and to help them. Here, these folks can get up to 24 months of loan forgiveness, of free home mortgage help. Nowhere is that needed more than for our veterans. We have a defense policy now which is lessening our military impact in Iraq and Afghanistan. Our soldiers are coming home, and they're the fastest growing group of homeless people this money can help them. So in August, we're putting this event together where we hope to get thousands of people so that we can get this money out in the system in Georgia. A call from you as the chief enforcer of consumer protection and help to help let's get that money there. Would you do that for me? Her name is Commissioner Gresham. They're working now, thanks to lighting the fire. The issue is we only have 28 months to get $200 million out to help struggling homeowners, and we're putting this event together then and that. Now, I got 50 seconds so much, but will you do that? Can I get
we'll be
you
glad to
that?
work with you and your staff to see how we can support that.
Can I get you
Yes.
to put a call down there? They said, that's a part of the problem. I don't need you to work with me. I need you to put a call down there in Georgia and say, offer help for this event for Congressman Scott in Georgia to get this free mortgage assistance to struggling homeowners and especially our veterans. The other point I want to ask is about my earlier comment about the student loans. As I said in Atlanta Business Chronicle, $39 million, yes. $1.2 million. The president has put forward a program last week to top or to cap monthly payments. What say you about that? Are you familiar with it? Is it enough? Quickly, I got 4 seconds.
Look, student loans are an enormous problem. We happen to have some great people at the Bureau working on them. We have been pushing for more refinancing options, and we're also pushing on the student loan servicers to do a better job, much better job, of actually servicing these loans and minimizing the pain.
Is what the president put in
Gentleman's
forward
time's expired.
sufficient?
We'll now go to the next witness.
I don't know for sure one way or the other, but it's the kind of thing that will create more activity in the area which is needed.
Gentleman's time's expired. We'll now go to the Vice Chairman of the Insurance and Housing Subcommittee, Mr. Lukemeyer of Missouri.
Thank you, Mr. Chairman. Mr. Cordray, the last time you were here, we discussed the situation with non-deposit lenders and Operation Choke Point. At that time, I asked you for a letter indicating your support for individuals and businesses that were doing business in a legal fashion with a legal entity to not be impacted, and you would support them. And I talked to you the other day, and we're working on a letter still, I take it. Is that correct? To that effect?
So I testified last week in front of Senate Banking Committee on this issue and indicated that, as we view it, people who are operating legally should be fined. People who are operating illegally should not be fined.
Right.
And that's the right divide here.
Right. We'd just like a letter stating that policy. Is there a problem with that?
Why don't you write to me, and then I'll write back to you.
Okay. We can do that. We thank you. Along those lines, we find that FDIC and DOJ are working together in this Operation Choke Point and have taken a scorched earth policy to trying to ferret out the bad actors. And while I do not support the bad actors, I fully support their efforts to find the bad actors in whatever entity, whatever industry there is. To do this in a way that harms the entire industry, in my judgment, is wrong. And so my question to you then is, are you working with either one of these agencies, the FDIC or the DOJ, or any of your people working with them with regards to Operation Choke Point or those activities surrounding that operation?
I don't really know what the ambit of Operation Choke Point is. That's a Justice Department term. I believe that we work regularly with the other agencies on issues around Know Your Customer, which is a standard approach to bank supervision. Which is that if someone is facilitating illegal conduct, they can be culpable, and they need to be very careful about that. The line I would draw is the same one you and I have just discussed, which is, are you operating legally or are you operating illegally?
Well, I would hope that you're working with them if somebody's operating illegally, but if they're operating legally, are you still in the loop here, still working with them to try and do the scorched earth theory of getting at every single individual in an industry and choking their financial services off?
I don't believe in a scorched earth approach. Again, we need access to credit, and people who are operating legally should be operating legally. People who are operating illegally should be either operating legally, changing their ways, or going out of business. That's the right divide.
One of the things that I discussed with DOJ as well as the FDIC is that we need a safe harbor in place for the banks to be able to continue to do business with entities that are legal entities and doing it in a legal way.
And they refuse to do that, and at some point we're going to have to probably do some legislation. Would you support legislation to provide a safe harbor for the banking industry to be able to continue to do business with legal entities doing business in a legal way?
So I'm not quite sure what to make of that, because the problem is it's a factual matter whether somebody's operating legally or illegally. For me to say, I think the law already says that if you're operating legally, you have a safe harbor. If you're operating illegally, you have no safe harbor. That's the law. The
problem, Mr. Director, is that, as you well know, there's intimidation going on here. There is bullying going on here by the FDIC in particular and by DOJ. They will go in and by inference say, hey, you shouldn't be doing business with these particular people, but refuse to put it in writing. So therefore, by refusing to put it in writing, they are bullying the bankers into no longer being able to provide financial services to an entire industry of people. It's going on with not just non-deposit lenders, but also doing it with gun manufacturers, ammunition manufacturers, and people who sell guns and ammunition. I mean, it's documented. Even the papers have got this information out now.
I don't know that that's so at the FDIC. I really don't know that that's so.
Well, I've talked with
press accounts about Operation Choke Point, and not clear on what the benefit of that is.
It's gone beyond just non-deposit lenders, and FDIC admits that they're doing this, and so we've got documented evidence by some of the stories related in the press, if the press is doing their business at all, that would be the case. So my concern is that are you willing to help us provide a safe harbor for those banks and stop this intimidation and this bullying that's going on with the FDIC and DOJ by putting in place a safe harbor? Would you support something like that?
If people are operating legally, they have a safe harbor by law. If they're operating illegally, they're not. The difficulty often is knowing which they're doing, and you have to dig in and really understand the facts and circumstances to know that. But I mean, I don't think you and I are far off from each other.
I don't think we are, but I'd like for you to say yes. I mean,
Yeah,
I think you agree that safe harbor is necessary, but you won't do it.
Not sure what to make of that. Honestly, I'm not. Sorry.
Okay. Well, I appreciate your comments this morning, and I'm running out of time, so I'll stop right there. Thank you, Mr. Chairman.
All right. I thank the gentleman for yielding back. We'll now go to the ranking member of the Oversight Subcommittee, Mr. Green of Texas.
Thank you, Mr. Chairman. Mr. Chairman, we have reached a point in time where we have to take the axe of truth and slam it into the tree of circumstance and let the chips fall where they may. And the truth is, Mr. Cordray, that if you eliminated the work on the building, the renovation process today, it would not end the argument, the opposition to the CFPB, the Consumer Financial Protection Bureau. It wouldn't end it because the building project is not an end. It is a means to an end. And the end that persons are seeking, not all but some, is to place the CFPB under the appropriations process. Then you would find yourself in the same position as the SEC. Budget cut, underfunded, understaffed, overburdened, still got 300 million people to protect, but you're under the process that allows Congress to cut your budget, manipulate your budget to the extent that you won't be efficacious. The truth is, we spent $621 million on a visitor center. A congressional visitor center cost $621 million. Wow. That's a lot of money for visitors.
Yeah.
I welcome visitors to the Capitol. I think the argument can be made that you don't need a $621 million visitor center. But that's just an argument. The truth is, if you become a part of the appropriations process, you will not be able to do many of these things that I have evidence of your being able to do. You won't be able to supervise bank and non-bank mortgage companies. You won't be able to produce new protections against irresponsible mortgage lending. You won't be able to produce new protections for homeowners facing foreclosure. You won't be able to produce a know before you owe mortgage disclosure program. You won't be able to stop mortgage servicing misconduct. You won't be able to take action against real estate kickbacks. And in my state, you just took action against a builder who had to surrender more than $100,000 received in a real estate kickback scam. You will become ineffective if the CFPB is placed under the appropriations process. This is why the design of the CFPB is such that you are under another funding source, so that you can have some independence, so that you can take some actions that many in this country who are big and powerful would find unacceptable. This is about helping people who were scammed with loans that were a part of the '08 crisis, the 327s, the 228s, the negative amortization, the no-doc loans. All of these things could have been dealt with had we a Consumer Financial Protection Bureau. The truth is, it took 66 years to get rid of Glass-Steagall. 66 years, but they did it. They emasculated Glass-Steagall. This is why we have a vocal rule today, because Glass-Steagall was emasculated. It took 66 years. But I say to you, Mr. Cordray, on my watch, I'm going to do all that I can to protect the Consumer Financial Protection Bureau. I don't like the allegations of invidious discrimination, and I think they have to be dealt with. And I plan to work with the chairman of the Oversight and Investigations Committee to make sure we deal with these allegations. But not only at the CFPB, but also at the banks. Many of these banks have similar circumstances that are not being aired. And I think we've got to go straight to the heart of the matter and deal with it across the length and breadth of all of the agencies that come under our purview. So I'm concerned about this, but I'm not going to limit my concern to the CFPB to the extent that it appears that this agency is ineffective and ought to be eliminated or emasculated. Not on my watch. I yield back the balance of my time.
Appreciate that.
I thank the gentleman for his promptness. I'll now recognize myself for 5 minutes. Yesterday in Politico and the Washington Examiner, it was noted that Ms. Angela Martin, who testified before my subcommittee in April, a CFPB whistleblower. Are you familiar with Ms. Martin, Mr. Cordray?
Yes.
Okay. As I remember, back in April, you issued a new equal employment opportunity policy saying you had zero tolerance for workplace discrimination and retaliation. It was noted in that article that Angela Martin received a financial settlement, that her claim has been settled. My question to you, sir, is the person who was, have you actually taken any disciplinary action against Scott Paluta for retaliating against Ms. Angela Martin?
So we've now resolved claims involving Ms. Martin on two separate occasions. The first time was in August of 2013. There were some difficulties, as I understand it, in implementing.
I'm not asking about the claims. I'm asking whether or not someone who continues to be in your employ, Mr. Scott Paluta, who the allegations were levied against, if he has been held accountable for his actions.
So I do not have a basis for disciplining Mr. Paluta.
So you've not fired somebody who's been proven to be, based off the financial terms of the settlement, it's clear to me that there was truth in this if you're going to make such a financial settlement with an employee. And likewise, if you're going to issue taxpayer funds to someone to settle a discrimination and retaliation claim, yet on the other side of the ledger not hold someone accountable, it seems irresponsible to me. How would you see it differently?
You said things have been proven. They have not been proven.
So you gave her federal money, you gave her taxpayer money on a frivolous claim.
No, it was not I don't know that it was a frivolous claim. It hasn't been proven. Okay?
It has not been proven. Have you done an investigation about whether or not it's been proven?
As you know, we began doing an investigation. That investigation proved to be defective, which was the investigator you heard from in front of your subcommittee.
Yes.
We're now reopening that investigation and working through it. But I don't want to get into the details of individual
I'm sorry.
actions.
You're reopening that
investigation?
It is an ongoing investigation again.
When did you reopen that investigation?
Recently, when we...
Because the Defense Investigators Group gave you the report, I think 6 or 7 months ago, if my recollection is correct. Did you start the investigation, your internal investigation, on the investigation after that, or just when we got the letter yesterday?
You know, and you have the letter from me to the
We got it last night, yes.
that investigation was not according to the statement of work. It was deficient. The company has acknowledged it.
It is not acknowledged,
we have to now redo
and
it
that's
again.
not the testimony we heard, Mr. Cordray. In fact, the testimony we heard was that for the reasons you outlined in the letter, that she didn't have sworn testimony and signed transcripts, that was a decision that the Bureau gave her because they didn't want to pay for her travel to D.C. to get signatures. So your claims that it's deficient are very dubious at best. I want to go to a separate report because you can debate one investigative firm. Revered consulting firm Deloitte was hired by OMWI, the Office of Minority and Women Inclusion. The report is rather damning. 6 areas of enormous deficiency within the Bureau, dealing with racial disparities, disparities against women as well. And so, yet, I read that you've promoted Stuart Ishimaru, who ran that office, after this report is received. It seems perplexing to me that the person that receives a damning grade from a revered consulting firm would receive a promotion. How does that work in your department? If you're taking these claims and if you're taking these reports of discrimination and retaliation seriously, how can I see that you're taking real action?
So you're misstating the actual events. All right. That report was commissioned by Mr. Ishimaru as an attempt to get a baseline so that he could develop a strategic plan for the OMWI office. All right, that was the purpose of the report.
Right.
It was generated for that reason.
And it was delivered in September of last year.
End of September last year.
And nothing has occurred until the March 6th American Banker article was
not
published.
true.
Well, that's what the
Not
union
correct.
testified to.
No,
There
it's
was
not correct.
No action against
the union's
retaliation.
not necessarily privy to everything that's going on in the agency.
Who is not?
So let me.
Who is not? Who's not privy to?
The union members don't necessarily know everything
No, the union
that I know
leadership.
as the director. They were engaging in negotiations, which they have done. Those have been fruitful. They have dealt with the performance review system thoroughly. It's now been discarded. We have gone back and corrected the effects for employees. The report was received at the end of September. It was an internal OMWI report. It was then raised to the level of executive leadership early November, so pretty short order. We immediately began looking at the issues around the performance review system because I was concerned about them, and that led to union negotiations of resolution in a matter of a few months. That's very fast. We didn't put this into a legal process and try to defend it and resist it for years.
My time has expired.
We resolved it.
My time has expired, and other members will now go to Mr. Carney of Delaware for 5 minutes.
Thank you very much, Mr. Chairman. Thank you, Director Cordray, for coming in again to answer questions before this committee. I appreciate what you're doing. I appreciate your personal responsiveness to me and my office and staff when we have questions and concerns. And thank you for this summary of the activities that you've done over the last year. And I'd just like to highlight a few. You've ordered $3.8 billion to be returned back to the pockets of more than 12.6 million consumers. You've collected over $141 million in civil penalties to companies that harm consumers. You've handled approximately 354,000 consumer complaints. You issued new mortgage rules. You've launched new tools such as Paying for College, Ask CFPB, and debt collection action letters that help consumers navigate critical financial decisions. You've done a lot on financial literacy. You've heard that's an issue that we all are concerned about, creating tools and providing resources to the people that you serve. You've created the know before you owe, which I think is really important. This is hard stuff for people. It's hard stuff for those of our constituents who are highly educated, and it's even harder for people that aren't and don't have a lot of access to these resources. So thank you so much for what you're doing in the agency. I would be remiss if I didn't say that I'm concerned as well about the complaints of racial discrimination. Very troubling, and I take you at your word that you'll get to the bottom of this. These things just can't happen, and I appreciate that. I'm going to take you up on your offer for us to come over and visit. I'm dying to see this fountain and the landscaping around which so much has been made. I'd like to go back to
maybe we'll run a shuttle bus for you and your colleagues.
Thank you. Maybe I could do that, lead that effort. I'd like to go back to something that Mr. Meeks said about the QM rule, and I did read the American Banker article. What I drew from the article was that it wasn't having an impact because of the exemptions given to Fannie and Freddie. And in your response to Mr. Meeks, you said that the rule has latitude and flexibility depending on what Congress might do. I'm co-sponsor with Mr. Delaney and Mr. Himes of legislation that we plan to introduce that would replace Fannie Mae and Freddie Mac with functions that would come under Ginnie Mae. Suppose that would happen, how would the regulations apply, and how is that latitude and flexibility, how do you see that happening?
So I think at the time we passed the mortgage rules, one of the big difficulties, there were a number of difficulties, was uncertainty about GSE reform. If and when that issue is resolved by the Congress, I imagine anything that might be done would be staged in over a period of time rather than some precipitous change.
That's what our bill.
And we would certainly, it would be absolutely essential for us to then revisit our rules in light of that and probably work with the Congress to understand how all of this should dovetail going forward. And that's absolutely what would be needed at that time.
So that's something that you'll commit to doing, provided, depending on what happens, and we don't, we obviously don't know what's happening.
Yes, that's right.
Different approach in the Senate. Actually, this committee has voted the PATH Act out, which would completely eliminate any federal guarantee there. We don't think that's the right way to go, and we have an alternative to that.
We didn't, we didn't know then. We don't know now. We tried to build in flexibility, and I think it reflects the sensible approach to those rules that we did that.
So you and I have talked about student loan debt before and all that, and I've expressed my concern to you. I've asked kind of for your advice as a professional, as a smart guy, not so much as the head of the CFPB, and you've been reluctant to share your own views on what we should do. Somebody asked you a minute ago about the legislation that passed in the Senate that would enable students to pay a percentage of their income, and you kind of deflected that. Do you have any thoughts, any further thoughts based on your more recent experience with what you're seeing out there in the marketplace? I notice that you say the student debt domino effect. Student debt can have a domino effect on the rest of the economy, and we've had some discussion about that.
Yeah, so look, in my capacity just as an informed public official, not on behalf of the Bureau.
And a parent.
I'm very concerned, and a parent, yes, and a citizen. I'm very concerned about the fact that tuition costs continue to spiral in ways that are unbelievably dramatic around the country. And I saw figures recently that the cost of tuition at our higher institutions went up. It was, I don't have the exact numbers, but it was something like 580% over a period of time where inflation.
600%.
And even things like housing costs and other things went up much lower pace.
Twice healthcare costs.
And this is an example of something that goes well beyond the Consumer Bureau. We end up with the back end holding the bag on this problem. People have all these costs. We got to at the state and local level, and the institutions themselves have to think hard about the costs they're imposing on the American public, and they've got to get to be more efficient.
Gentleman's time's expired. We'll now go to Mr. Huizinga of Michigan for 5 minutes.
Thank you, Mr. Chairman, and Director Cordray. I appreciate you being here. I know this is tough coming up here. You feel badgered, feel beat up. I'm not going to try and do that.
My job.
I know it is part of your job, but I'm not going to try and do that. I'm actually I have some serious questions though. January 28, we had a hearing where you were up. I had submitted a question with a series, 4 different points, sub-points kind of under it. We received the answers yesterday. That's 6 months, almost 6, but to be fair, 5.5 months. Is that an acceptable time frame to be getting back to an oversight committee like we are with some pretty basic questions?
It's not the time frame I would like, but it wasn't. If I had a set of questions from you and I was responding to you, that'd be one thing. I mean, we've had quite a few follow-ups and document requests and emails and other things from this committee, which is fine. That's the committee's job, but it has been a burdensome load for us. We're trying to get back as timely as possible. Some things we can get back more quickly, some things more slowly. I will say it's always true that a committee hearing like this concentrates the mind and causes us to get some things done because we know that it's time to do so. But we've been under tremendous strain to accomplish all
I've got a couple of other questions regarding QM. One of them is a repeat of the answer or the question from January, I hope. And this was from our hearing with Meredith Fuchs from April 8.
Yeah.
Any idea when those might be coming back?
Sorry, so what's the question?
So I'm just a set of 4 simple questions. Yep. Some of them are slightly modified from earlier answers. We're basically in the answers you gave us from yesterday were we're monitoring the situation. So do I have to wait another 6 months to get the answers for this set, or hopefully will that be quicker?
I'm sorry, so you're putting out a set today, a new set? Or
no, these were submitted to you on April 8 already. Okay. So I'm just, how about we work better than 5.5 months? Can we agree to that?
We'll absolutely do our best.
Okay.
Yes.
Perfect. Openness and transparency. It seems to me that the goal, I wasn't here for the creation of Dodd-Frank. I'm dealing with the echo effects of it. It seems to me that it was to ensure systems were more transparent and easier for consumers. Is that happening?
I think it is in some areas. We're working to make it happen in some areas. I actually do think that the tenor of the market has moved in some considerable way in that direction with a lot more work yet to do.
I would agree with that. I mean, there's a lot more work part. There's the disclosures that I see now when we all get our credit cards or our bank card statements. Certainly is not easier. Certainly is not, it's more confusing, I think, to the people in general public. It's frustrating for those that are running the operations. It's frustrating for those of us receiving it. I'm afraid that that's bleeding out into other areas, including our QM situation, which was some of my questioning from back in January and part of my question. So I'll give you a preview, or actually this was from April 8. So I'll do a vocal follow-up here, I guess, on dealing with the QM rules. A recommendation had been to increase the threshold of quote-unquote small loans from $100,000 to $200,000. The answer you gave to me from that question back in January was, well, it could have been worse. It was $75,000. We increased it up to $100,000. Do you have the legal authority to increase the amount? And if so, why haven't you increased the threshold? That's one of the questions that I have. The other one is that I'm very concerned about this. QM is quickly becoming known as quitting mortgages. When you talk to small lenders especially, they are trying to enter into this and do the right thing. They're not the people that caused any of this housing bubble for the most part. They are not the people that have these nameless, faceless relationships. These are the people that are meeting their customers day to day. I was a realtor for a number of years. Yep. I dealt with that. But how do we reconcile this one-size-fits-all approach taken by CFPB, promulgating these QM rules and to promote consumer choice and facilitate access to that marketplace when it doesn't seem to be happening?
So I actually agree with you on this about the smaller lenders, and we actually did not take a one-size-fits-all approach. We had special small creditor provision for any institution with less than $2 billion in assets and makes 500 or fewer mortgages a year. Everything they do, whether it's sold to Fannie and Freddie or it's kept in portfolio, is a QM with a safe harbor.
$2 billion is
and
a pretty low
with
threshold,
dozens of smaller creditors who say this about, well, we're going to have to get out of the mortgage market. And when I talk through with them, it's clear that they didn't understand that part of the rule. And we're trying to get the word out to them. I know the trade associations need to work harder at getting the word out to them. But it wasn't one size fits all. Special provisions for the small creditors.
Gentleman's
and we're
time's
happy to
expired.
Consider more.
Gentleman's time's expired. We have an announcement of House floor votes. I'm respectful of your time. I'm also respectful of heads of the CFPB, their packed schedules. And so, aware of this, if we could have members' indulgence on time, we'll now go to Mr. Ellison of, Mr. Heck of Washington, the other Washington.
Thank you, Mr. Chairman. Director Cordray, thank you very much for being here. I never want to miss an opportunity to thank you for your public service and that of your agency, and in particular that of the Office of Service Member Affairs. Somebody who represents Joint Base Lewis McChord, it is deeply appreciated. Although I will add, in actually reading your report, I note that the office made 77 outreach visits in the 6-month period ending March 31st, and none of them were near the largest joint operating base in America.
She's in great demand. You put in a request, we'll see what we can do.
I'd like to follow up on something Mr. Royce asked you, and I was very pleased to hear you say that you were exploring ways in which that the agency might be able to issue advisory opinions. I want you I want to make sure that you know that while that bill came out on a partisan divided vote, there are lots of members on this side of the aisle who think that's not just a good idea. They think it's a very good idea. And as a matter of fact, I would suspect as a former Attorney General that your agency probably issued something that in our state we call Attorney General's opinions and even letters that precede that.
About 100 a year, yeah.
This is a good, smart business practice that is win-win. Our sensitivity to your concerns about how the bill as worded now might not work is something we want to take into account. So I'd like you to enumerate what are the kinds of changes in that legislation that would enable you to implement it in a good fashion. Please hear me. We think the idea behind this bill is excellent.
So I'm not at all certain that legislation is needed in this area. I don't think anything prevents us from issuing responses. We do it all the time. In fact, people ask us questions about our mortgage rules, and we put out guidance and various things, and you know, both verbally and in writing, we do that all the time. But it's sort of a formal procedure for particular instances where people could have some assurance around what the answer is. Again, I think we can do that. I think we are doing that in various respects. I think we could do it in more respects. There are things in that legislation, I'm not that familiar with the legislation, but mandatory time frames and everything has to be answered. You know, all of that could potentially really impede other work of the Bureau. But I wasn't Attorney General in Ohio. As you say, we did have a mechanism under state law for advisory opinions in appropriate circumstances from designated people who could ask us those questions, and at times it was quite helpful.
So I heard you say you don't need legislation to do this. Are you hereby now publicly committing that you will pursue the development of an advisory opinion process at the agency?
So again, we're actually doing this all the time in a somewhat more informal way. People ask us all the time about
would you commit to doing it in a more formal way?
I think you can expect to see us doing more. You'll see more from us in this area, yes.
So someone asked, and I do not recall whom, about the Military Lending Act. I want to remind you that when you were here in January, I asked you, given the tardiness of the Department of Defense's issuance of regulations, maybe it was time to actually place the responsibility for rulemaking with the agency that has the most expertise in this regard. Frankly, that's you. Here we are, 6 months later, no rule, and you demurred under very appropriate diplomatic terminology. But Director Cordray, it is time. I realize getting it right should come before getting it done now, but is it not time for us to call for this responsibility to be placed with the agency that actually has the deepest expertise on how to go about this?
I think that's actually what Congress did in the Dodd-Frank Act, and then later when they reopened the Military Lending Act at the end of 2012. They gave the authority to the Department of Defense, but they urged them to work with the other agencies and specifically said explicitly they should consult with the CFPB. We have worked with them. It's been a very fruitful partnership.
Well, it's not fruitful in the sense of having the regs.
It actually is. There is pretty much a final version of a regulation, is my understanding. It has been working its way through the Department of Defense. Soon will be on its way to the Office of Management and Budget, which is a required step they have to take, and very shortly thereafter will be proposed publicly. And I think you'll see it's going to be a good rule, and the Department of Defense has worked hard on this. They have many other things to do. I think we're well aware. I think people should continue to express interest in this, and that will be helpful. But I think things have moved along quite a bit, and I think we're on the verge of something going out.
Gentleman's time's expired. We'll now go to the Vice Chairman of the Financial Institutions Subcommittee, Mr. Duffy of Wisconsin.
Thank you, Mr. Chairman. Mr. Cordray, the National Mortgage Database, invasive, but per your testimony today, I think you're telling us it's a pretty good database that's going to help you with good information to make rules. Yes?
That's the intention.
Okay.
Yes.
And that database, per your testimony, is a database that samples information. 5% per your testimony.
That is correct.
I would just like to bring up my point in our prior conversations that I've asked you to actually sample data with regard to credit card information.
Yep.
You could get similar good data instead of taking nearly 1 billion credit cards and sampling, actually collecting data off those credit cards. I think you've made the point with the National Mortgage Database, and you should then apply that to the credit cards. Fair point?
I understand that, and what I want you to know is we're listening, we're hearing, and where we can do sampling and that'll be sufficient, that's fine. Where we ask about the data and they say it's just easier for us to send you all of it rather than us having to cut out a sample and it may not be.
Well, don't ask for it all. Just ask for 5%. I'm sure you could make the same argument too with a National Mortgage Database. They say it's just easier to give it all. Listen,
yeah,
it makes sense. So I think
we'll go back and continue to think further about that.
I would appreciate that. Now, I think your testimony was also, you indicated that you don't care about information personal to me. I think that was your quote. Is that correct?
I really don't care about your particular
well, I'm going to tell you something.
habits and the like.
One, what's
Although I
personal to
understand
me-
you have a new arrival, so you probably have some economic burdens.
Well, that's what I was going to bring up. I do care
Yep.
that you know the number of children that I have and the ages of my children. I care about that. That's personal to me.
I don't.
It's also personal to me, my religion, my phone number, my race, my education. And my education records are personal to me.
Mm-hmm.
And here you've indicated to all of us that you're going to collect it. Now, I want to ask you about that collection because in December 10th of 2012, a SORN notice went out about this new mortgage database.
Mm-hmm.
And it was pretty straightforward, and it didn't get much of a rise out of Congress. Basically, you're going to collect loan-level information. But you've now reissued it and greatly expanded the information that's going to be collected, and that's been a topic of many people here today. And I think it has a lot of concern for not just members of Congress, but for America as a whole. Is it your testimony that you are only collecting religious affiliation or numbers of children and ages, but then parsing it out and it doesn't go into the database? Is that your testimony?
We're not doing it. A credit reporting agency that actually handles that kind of information all the time is doing it so that my employees will only see de-identified information. That's the effort here, and the same is true of FHFA.
Okay, so I want to talk to you
think
about
it's
your notice then.
responsible.
Because the notice says the revised systems of record notice is set out in its entirety and described in detail below. The revisions expand the category of records that will be collected, maintained, and stored in the system, as well as make minor changes and clarifications. So you don't tell us, I'm going to just collect all of these data points that concern us. You tell us here that you're going to collect it, maintain it, and store it. And Mr. Cordray, you've been here 5 times. You are a smart man, very smart, and you have a lot of smart people that work for you. When you put these out, you know exactly what you're doing. And you didn't specify, we're going to collect all of this information that concerns us, but we're only going to store a certain portion of that which was collected. You didn't specify it here. You're collecting, maintaining, and storing per your notice.
So again, the point of the SORNs, they're typically written very broadly.
I'm not going to go into your I know we're not going to talk about your definition of SORNs. If you want to answer
but I
why
can
you're
tell you
writing it that way.
what we're doing about the database. I think it's in line with what you
I want to ask you one more
we're
question.
happy to keep you
And
posted on it.
You're giving me the color of a song.
Okay.
The quote.
Trying to help you.
Prior testimony.
Yeah.
I introduced a bill that would require you to ask for permission from Americans before you collect their information. I imagine you don't support that bill.
It just wouldn't be workable.
Let me ask you a question. Would you support a bill that would say something like this? You can collect the consumer's personal information only with their consent,
and notify consumers regarding their collection and use of personal information, including purpose, method, and scope of use. Would you support that bill?
So we're not going to use that personally identifiable information?
Would you support a bill like that?
It would render
information
use
Would you support a bill like that?
It would. I don't typically take position in legislation, but that would make it unworkable for us to have data. We'd be blind to the mortgage market,
give you a little
the
notice
mortgage
here.
crisis, and all
This
of that.
law exists. It exists. Do you know where? Communist China. I yield back.
Gentleman's time's expired, and strong note. We'll now have Mr. Ellison of Minnesota recognized for 5 minutes.
Let me thank the chair and the ranking member. Mr. Cordray, thanks for being here today. I just want to note for the record that the CFPB is investigating more than 354,000 consumer complaints. I got a picture up on the screen, the breakdown of the complaints that you get. You're getting complaints from payday loans, money transfers, student loans, consumer loans, credit card. I mean, does the volume of complaints that you get assure you that, without regard to what anybody else might say, that the American people feel that your agency is important and is there to help them?
And I actually think many more American people would want to bring complaints to us, but don't yet know to do that. Yes, I do.
Yeah. So also, I'm kind of concerned about the market for buyers of manufactured homes. I requested information from the Manufactured Housing Institute about their largest lenders and their loan data, and they recommended that I get the information on their industry from the CFPB. Now, what has been the CFPB's approach to assessing potential concerns about these borrowers' financing options?
Frankly, I'd be happy to have you get it from them and then share it with us. I mean, we've been trying to get information, and we'd like to have more. This is an issue that came up in this committee last time I was here. A lot of interest in it. We have interest in it as well. We're trying to understand that market. I will say, and Mr. Chairman and others may be interested, I know you will too, we're now going to we're working on a white paper on manufactured housing that we want to put out hopefully toward the end of summer. That will bring you up to date on what we know about it, and if there are issues or problems in this industry, we want to consider and potentially address them. I will say some of the concerns that have been stated don't necessarily jibe with some of the data. We saw that the division of Berkshire Hathaway that focuses on manufactured homes, their profit was up 60% this first quarter over a year ago. It's not at all clear that manufactured housing is lagging in any particular way, but that's the kind of data we need to understand in order to assess whether there's a problem, if so, what the problem is, and what could or should be done about it.
Well, there's a bill that's in front of the Congress now called the Preserving Access to Manufactured Housing Act. It's presented as a bill. It's H.R. 1779. It's presented as a bill that is designed to help occupants of manufactured housing. The idea being that people aren't lending to this market, and that if we allowed manufacturers to assess higher interest rates on these people, that it would attract them to the market. Do you have any views on this particular piece of legislation you're in a position to share today?
So this is the same as with all aspects of the mortgage market since the rules took effect. We're interested in people bringing us data.
Right.
If in fact they aren't lending, if that's true, we'd like to know the facts on that. If it is true, we want to know why that's so and want to think about whether something could be done about it. We're interested in data here. We'd like to have data. Industry has data, and if they would share it with us, that would help us all see the picture more clearly, and then we could talk and consider together. And we're very accessible to them, but we need data, and this white paper we're going to put out will help a little bit, I think, to clarify the situation. Maybe that'll prompt people to think more specifically about other things they can bring us and show us.
Thank you, sir. My last question is going to be, and then I'm going to yield after you answer, is what can you tell us about the CFPB and their activities to ensure auto buyers are not overcharged due to their ethnicity or protected factors like race?
So what I can say is we worked with the Justice Department and resolved a very significant auto lending discrimination matter in December. $98 million, significant remediation to consumers. We continue to work on the problem and try to understand it, and we're interested in working with industry so that so that they can understand how we might be able to approach this and resolve it on a broader basis. And there was suggestion earlier that people might be willing to come to us and talk to us about a rule. We're open-minded and welcome all discussions. And although we've been very careful about not reaching out aggressively to dealers because they're not within our jurisdiction, and Congress specified that, and we need to be respectful of that. As they have been wanting to come to talk to us, we've been trying to open the door to that and see how we can understand their concerns as well. Again, trying to respect very carefully our jurisdiction and not overstep our bounds.
I just want to say briefly, please root out discrimination in your agency and any other agency. Root it out, because it gives you the moral authority to protect these buyers who are.
I hear you loud and clear on that, sir. Yeah.
Will the gentleman yield? Thank you for raising the question about manufactured housing. And I think that the information that was shared with us about what you're doing will help us to ask for them not to take up the bill until we get this information.
Time of the gentleman has expired. We have 3 remaining members. We have votes on the floor. If the members wish to voluntarily restrain themselves to 4 minutes, I think we could conclude and allow our witness to exit. Chair now recognizes the gentleman from Tennessee, Mr. Fincher.
Thank you, Mr. Chairman. And Mr. Cordray, thank you for up here. Thank you for coming today. Manufactured housing is turned out to be a big issue in this committee. The last time you were here, several of us talked to you about it. You and I have had a conference call about trying to fix this issue. Since the CFPB's new rules for HOPA went into effect January 1st, manufactured home lenders have stopped making loans that are less than $20,000. A $20,000 loan allows many families the opportunity to buy a starter home, build equity, and gain home ownership, or sell a home and move to something better. You made a statement a few minutes ago to my colleague, Mr. Ellison, about profits being up. This has nothing to do with profits of manufactured home businesses, sellers. This has to do with access to consumers being able to purchase a product. The CFPB's new rules have caused a reduction of credit to low and moderate income borrowers with low credit scores, particularly those in rural, distressed, and undeserved areas. In conversations between the CFPB and my office, we have been told that the Bureau wants more data in this area. Voluntarily, at the request of the CFPB, leading manufactured home lenders have provided a significant amount of data, 4,000 pages to be exact, in this regard on March 6th and March 24th of this year. It's my understanding that this data represents roughly 1/3 of the lending activity in the manufactured home market. In addition, data was given to the CFPB on following dates during meetings between the industry and your staff: June 18, 2012, August 7, 2012, December 17, 2012, May 17, 2013, September 23, 2013. It is also my understanding that the CFPB has, on their own initiative, communicated with additional manufactured home lenders. I'm just going to kind of skip through some of this to hopefully let time for my other colleagues. Number one, can you confirm that the CFPB has received data from the leading lenders in the manufactured home market? Just yes and no.
Yes.
Okay.
Not all that we want, and the March data will be most relevant. And to be honest, in our efforts to protect against personally identifiable information, we've had to have some back and forth with the people who submitted that data to make sure it's being handled correctly, and I believe it will be helpful to us. Yes.
Okay. You have the ability to mitigate the impact of Dodd-Frank, HOPA, and loan originator rules on manufactured homeowners and the industry that serves them, but you continue to delay after the industry thoroughly complied with your data request. My other question, and this has been, I guess today, much more than about manufactured homes. The data that you're collecting, is it the practice from your agency to collect this data and do nothing with it?
That is not our practice.
Okay.
I mean, the whole point, look, I'm not collecting data because I'm collecting baseball cards or something. This is information necessary so that we can do things like that all of you want. We can understand what's happening in the mortgage market, whether the rules are getting it right or getting it wrong, whether the Credit Card Act is helping or hurting, and if not, whether Congress wants to reconsider some of it or whether we should reconsider. That's the kind of information we need.
We want to get this fixed. We have a bill with over 100 co-sponsors. This is bipartisan. This is not rocket science, Director. We have been willing to negotiate and try to make this bill, more
there's a number of bills. Which one?
Well, we are working to try to make it where we can pass this through the House, get this problem fixed with the industry, and more than the industry. This is not about the industry.
What's the this? Is this data collection or is it manufactured housing?
Manufactured housing.
Okay, I see.
This is about the consumer having and being able to purchase a product. That's what this is about. This is not about business. This is about the consumer. So we're going to keep working. Hopefully, you will be given the data that you need. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Chair now recognizes the gentleman from Illinois, Mr. Holtgren, and informs remaining members there's about 8.5 minutes left on the vote on the floor.
Thanks, Chairman. Director Cordray, I'd like to focus on why the CFPB is spending money to renovate a building it doesn't own. We have not received a satisfactory answer yet on this question. Just last week, you testified before the Senate Banking Committee that the building renovation costs were, quote, taken account of in the lease that we negotiated with the OCC so that our lease payments were less over the 30 years to take account of the fact that we, not the landlord, would be making the improvements to the building, end quote. This is not what the OCC tells us. In fact, they say, and I quote, the OCC contracted with an independent real estate appraiser to determine the fair market value of 1700 G Street and a fair market rental rate. The appraisal considered the current condition of the building. The fair market value of the building and the fair market rental rate were not based on any assumption that the building would be renovated or upgraded. Rather, the fair market value was based on the assumption that the building would be leased as is. The appraiser determined a fair market range for the rental rate. The agreement between the OCC and CFPB provides for a triple net rate that reflects the midpoint range of the appraisal, end quote. I've got several questions on this. Director Cordray,
it's consistent with what I'm saying.
Let me finish my questions. How do you reconcile the OCC statements with your own testimony, first of all? Wonder if you'll provide the committee with documentation substantiating those claims, and if, as you previously testified, the Bureau knew that at least $100 million would be needed to renovate the building, yet this cost would not be taken into account in rent, as the OCC asserts, why would the Bureau volunteer to make these renovations rather than find a more suitable location? How does this make any fiscal sense, and do you not have an obligation to expend your agency's funds responsibly?
So let me try to lay this out, and I really want to get this across, because what you said is just consistent with what I have said. What the OCC did was they put together a lease and they set a rate based on the as-is condition of the building, which right now is classed as generously, in my view, a Class C building, fairly subpar. So that's the rent that we're paying over the 30 years. After we do these renovations, we hope that the building will at least be a Class B building. I don't know if it will ever get to be a Class A building. That would be a higher rent. Having done that ourselves, we will then have potentially a Class B building for the remainder of the occupancy agreement, which is a significant amount of time paying Class C rent. That's the difference between the two, and it comes out exactly as I tried to lay it out.
Yeah, it seems like a conflict to me, and it seems like a misuse of taxpayer dollars when certainly there could have been something available that would be much more appropriate. Let me move on to QM rule. The CFPB has adopted policies that have increased legal uncertainty rather than alleviate that uncertainty, which has hurt the growth of the mortgage market. One example is the CFPB's decision not to preclude the use of oral evidence in cases brought by borrowers claiming that they did not have an ability to repay. It's in its QM rule, the CFPB states that the Bureau believes that courts will determine the weight to be given to such evidence on a case-by-case basis. In response to this decision, we have heard that banks and credit unions will need to videotape closings to have a record of everything a borrower says at the closing table. Have you heard about this problem? Is this an example of the CFPB's policies creating new compliance burdens and massive legal uncertainty for smaller lenders already struggling under the regulatory onslaught unleashed by the Dodd-Frank Act? And wondered if you'd be willing to reconsider this decision to provide more certainty to community financial institutions that are suffering under the weight of regulatory burden and uncertainty.
So two things. The first is that we now have some months of data, and there has not been a huge spike in interest rates because of risk around potential litigation. We predicted that there would not be any significant spike. There has not been, and I think the market has pretty much.
I think the biggest concern I've heard is compliance burdens, and that is a concern. The idea of having to videotape closings is ridiculous, and yet that's the concern. My time has expired. I'm going to yield back the balance of my
Somebody
time.
wants
So
to do that.
Mr.
We're
Ross
working to
can finish up. Chairman,
we're
I yield
working to
back.
streamline the closing process, and that's an exciting initiative of the Bureau.
Gentleman is yielded back. The chair now recognizes the gentleman from Florida, Mr. Ross.
Thank you, Mr. Chairman. Director Corday, the semi-annual report states, quote, the Bureau is in the process of considering what regulations to propose to address issues in the market for small dollar credit that have been identified through the Bureau's research and public engagement, close quote. And I've discussed this with you before with regard to payday lending and small dollar credit. I come from Florida. We have a great law in that regard. I understand you've been working with Commissioner Breakspear at the Office of Financial Services. What is your timeline in issuing regulations in that particular industry for small dollar credit?
So we just published our unified agenda, which kind of lays out the immediate future in terms of potential rulemakings at the Bureau. It's something we did and we published on our website in response to an oversight question I got from Congressman McHenry a number of sessions ago. And we indicated that on the payday lending, we will be writing rules. We expect those to potentially come out in a SBREFA process sometime later this fall.
Okay, so within the next 6 months easily?
I think that's fair, yes.
Okay. Just real quickly, because you testified to Mr. Lukemeyer that you're not actively participating in the Operation Choke Point, but yet many of the businesses that are being affected by this come under your regulation. Do you feel that you're being usurped, your authority is being usurped by bank examiners or banking regulators that are engaged in the Operation Choke Point?
I don't think so. The reality is, and I found this when I came into the Bureau, and I was a little surprised because I just didn't know how these things worked at the federal level, but there are a number of federal banking agencies. There's some real overlap among them. That is alleviated by us working together in a close and collaborative fashion, which we try to do.
Are you working with them under that operation?
What we try to do is pay attention to know your customer issues.
Now, there's a $17 billion business out there in consumer loans and small dollar credit.
Yeah.
Operation Choke Point, if it were to eliminate due to reputational risk this particular supply, if you will, where is the demand will remain? What will happen to those? What will happen to those consumers that need this particular market niche?
Well, what we're working on right now is potential regulations that you and I just discussed for the industry.
Right, but when you have
not
in conjunction with Operation Choke Point-
consistent with wiping out the industry. It's regulations to make sure that the industry is working in a pro-consumer fashion. That's our intent. I have recognized and acknowledged the demand for small dollar credit. People have that demand.
And if they don't have it in a regulated fashion, they're going to get it in a black market fashion, and that's even more harmful to the consumer.
I agree with you on that.
Finally, just real quickly, with regard to the rule of law, and as a lawyer, you believe in due process, the independence of the judiciary. Bulletins, the issuance of bulletins, they don't hold the force and effect of a regulation or statutory law, but yet you continue to issue bulletins which don't allow for public comment in lieu of issuing even interim rules and regulations. Why is that, and what can be done soon to get that resolved?
So again, my understanding of the Administrative Procedure Act goes back about 70 years now, is that there's a distinction between substantive rules that change the law, and notice and comment is required, and then guidance and other things that agencies use quite a bit, which is not really a change in the law. It's just a clarification or restatement of the law so that people can understand more clearly what it means.
And so your April 30th press release commending BMO Harris for adopting the pay scheme recommended by the CFPB is a guidance?
That was just a statement. That was just a statement to the media. That's all that was. Yeah.
Mr. Chairman,
but I meant what I said. But it was.
I know I need to go.
Gentleman yields back. I want to thank Director Cordray for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions to the chair, which will be forwarded to the witness. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing stands adjourned.